Yo, half day, folks, half day. Oh, man. Welcome on back to another Stonk Market live stream. We're trying really hard to break through. We've got a line that we just can't break through today on Black Friday. Everybody is desperately waiting for the bullish breakout on 617. No, but some say it's the most critical line in the market, and everything moons after we just break 617. Can I get a moment of silence for the 617, please? The 617. Welcome everybody to another live stream. Today is obviously Black Friday, so I think it goes without saying that yes, there is a Black Friday sale coupon at meetkevin.com for lifetime access to the Alpha Report, and of course over at reinvest.co for our real estate AI. With that out of the way, let's get into some focus and news, folks. Markets, volatility down, no negative catalyst. We should be going up. We should be pumping. There's no reason to be pissed right now. Now, I will tell you that somebody says, Kevin, what's the proprietary what's the secret sauce about our AI? You want to ask me about the secret sauce of our AI? It's me. It's me. That's the secret sauce. That's so simple. People are like, Kevin, what's so special about the Reinvest AI? It's Kevin. It's that Kevin sits there and trains the model. I spend the hours training it. It's not, Elon's, group of FSD labelers going, yes, that's a stop sign, sir. It's Kevin. That's the point. It's supposed to be an AI of me. But anyway, let's focus here on markets and news today. So we'll be watching the 617 breakthrough here. Let's see if we can get it. We already lost it in the AM in the first, 5 minutes here, which is pretty sad. Let's go get a peek. Did some fundamental analysis this morning in the course member live stream. Quite a bit, actually. And now we're going to go take a look at what's new on the street. You did see that Sarah, unfortunately, National Guard's individual, did pass away. Her father did say yesterday that she had a mortal wound. Very sad. He had some drama about the futures market with a CME group, having little poopsie doopsies. Really was giant, big, fat, nothing burger. Nothing to see there. It's back up. It's fine. Who cares? Nobody's paying attention to this. It really doesn't matter. Okay, so instead, we're really looking for news, and frankly, there is none. You've got the 10-2 yield stable at 52. I've got all indices green here. I've got the 10-year back over 4. We've got, let's see here, User 70331 says Tesla chips will kill Nvidia, AMD, and Google /S. Well, thanks for the /S, because they tried that with Dojo, and unfortunately that failed. It's sad because I had a lot of enthusiasm for Dojo for Tesla, and I love Tesla, like my cars. I love my Teslas. I went to the doctor last week, and actually last week, it was Tuesday, I went to the doctor. Or is it Wednesday? I can't remember what day I went to the doctor. I go to the doctor and they're like, oh, how do you like your Cybertruck? And I'm like, I love it. I got like every Tesla there is. I love the Tesla. I love the full self-driving. I hate driving the car without the full self-driving. It's amazing. It's so remarkable. But, that's, yeah. I guess that's where it stays. Warehouse sector is seeing a rebalance. Oh, the warehouse sector is rebalancing. Not a rebalance. Oh, no. Not a rebalance. SEC investigating Jeffries. We talked about that yesterday. We've got Bitcoin hopefully trending back to 100K here. Good little risk asset. Starbucks worker union accelerates strike on Black Friday. That's interesting. Coffee hasn't been this expensive in decades. Switzerland has long welcomed the ultra-wealthy. A referendum on a new tax hike has riled them up. Oh, how dare you raise the taxes, the taxes, the taxes. What do we got here? Putin breaks his silence on Ukraine, says Moscow ready for serious talks. Yeah, we talked about this yesterday. It's full bullcrap. That's all it is. So, what else here? Somebody says SMX is in the fight tree. What's the fight tree? Is that like a typo for dump or what? SMX? Oh, it's halting to the upside. What the hell is this? So this, it's a $63 million market cap company, folks. It's a pump. It's a meme. It's a meme. Oh, look at this. So this had crazy volume on Wednesday, and it keeps pumping in the AM here. SMX. Oh, it's a meme play, boys and girls. A meme stock. Let's go find out. E-Trailer here. I'm gonna look up the investor relations. SMX investor relations. E-Trailer says, Kevin, you may remember me. I'm a Phenom pilot. Almost worked for you. Almost worked for me. Did you? I don't know what that means, but what's up, dude? Dude, flying a freaking Phenom is awesome, man. It is such a cool job. Okay, SMX. What is this? A logistics company? Investors? The hell? What is this company? 6K. Oh, okay, great. So we're foreign registered already. All right, can we get like a quarterly or something? No quarterly reports, really? Do we have an annual on this puppy? Yeah, we got an annual. They don't do quarterly reporting? That doesn't make a lot of sense. Publicly, what is this puppy? Usually these meme plays, they have absolutely no fundamentals, but what people love is that when the market cap is so small, like $63 million, if somebody goes in and buys 20 grand, it moves the market, you know? So like somebody can go make a Reddit post and be like, guys, this is the best stock ever. And then they put 20 grand in on it and it moves the stock, and then it like reiterates like, oh my God, well they must be right. So I'm trying to figure out where the actual statements of cash flow for this company are. Like, does it have financial statements? And I can't seem to even find the financial statements. Here we go. Okay, here we go. So I've got loss. The company generates losses. It has for the last 3 years. I've got cash flow from financing activities. They issue shares to make money. And repayment of bridge loans. So they issue shares. They did a SPAC. Oh, so this was a SPAC. Aha. Okay, got it. So it's a SPAC play, and they have no income. Are you serious? Where's the income? G&A. There's no income. So this is a pre-revenue company. So of course they only have losses. They have G&A and research expenses. I have $20 million of current debt and $4 million of current assets. I have $2 million of cash and I have $20 million of current debt. Bro, this needs to meme for them because they're going to go bankrupt. Going concern, of course. Of course. This is not a sustainable company. But Kevin, can it meme? What do they even purport to be? Let's see here. So this is... I don't even know what the hell it is. Do we not have a like statement of business description for this business? And it doesn't matter. It doesn't even matter what they say they are. They make no money. They SPAC'd. And it's a meme. That's it. Okay, so we know how to play that. Oh, here we go. What is this? Business. Okay, it has vision, guys. It has vision. Envisions itself as the next generation solution to brand protection, authentication, and anti-counterfeit. What? What is this? Authentication to track and uphold supply chain and quality assurance. So supply chain, blockchain supply chain tracking. Okay. Okay, we're gonna track your supply chains on blockchain. All right, so it's a full meme. Let's make a couple notes on that really quick because I think a lot of people are gonna ask me about it, and we'll write it down really quick. So see it, like that didn't take us very long to figure out, right? And that's the whole point. You know, somebody in the chat spamming SMX. Oh my God, Kevin actually responded. But we've got less than 5 mil in current assets, less than 3 mil in cash. I've got over 20 mil in current liabilities. This is a pre-revenue company. Pre-revenue blockchain supply chain tracking company, and just loses money. That goes without saying, and relies on selling stock to make money. And then in addition to that, it's a momentum play that's a tiny market cap of 60 mil. It looks like it was a SPAC. So the way to play these, okay, because I'm going to also give you the lesson on how to play a momentum play. Momentum plays have very little liquidity, so exiting is the hard part. Must have trailing stops, though can tank very quickly. At 60 mil now, though, these plays can meme up 10x. The company needs to raise money. The company should rush to do a shelf offering and finance itself. Either way, fundamentally unproven. Do not diamond hand. Do not diamond hand. Be very careful. It's a gamble play. Okay? Can I have been more blunt? I don't think so. But look at that. What did that take us? It took us 5 minutes to understand this whatever 50 $60 million market cap play. And bro, what pansy crap is this Q's garbage? Look at this pansy crap. Again rejected at 617. What the hell? Sonny says, Kevin, in an emergency, do you think you could land a commercial airliner on your own? Dude, I would not raise my hand to do it. I'll put it that way. I mean, like, everybody thinks they can, right? And in smooth weather, in no winds, no wet runway, anyone can do that. I've never touched a reverse thruster in my life. I'm gonna run off the end of the runway. But like every jerk off thinks they can land a plane, but then when the variables start getting a little different, you're cooked, dude. So no, man, I will hardcore say nope. Somebody else do it. No, I mean, I'm all for undying confidence, right? But no thanks. So let's see here. Kevin, you do an awesome analysis on Tesla if they buy list. However, when has Elon ever bought the discount brand? What would your evaluation be if Elon bought Uber instead? Oh my God. That would be amazing. Like, that's a great idea. Uber's a lot more expensive, but it has the human, like, this is what people reach to first. It is the first go-to app. Like, I wish Uber was selling for a discount, but it's like at near all-time highs. I mean, in fairness, we're about to come off the 100-day moving average here, but no, this is fantastic. Love your content, Kevin. You're made old enough to remember 2018. Oh, that's awesome. Thank you. I appreciate that. So what else do we have? Let's see here. Somebody says, but SMX has news. Oh my God. But it has news. They filed a press release. That's always the way to do it. You just have to file a press release and then it gets the news headlines and that. Anybody can pay to do a press release. What is this? Rare Earth reality check. SMX brings verification to metals. Hey guys, since MP Materials is memeing, did you know that we're now going to also track metals to let you know if those rocks are coming from China or somewhere else? We're gonna authenticate where your rocks are coming from. Bro, this is retarded. Sorry. I'm sorry. Okay, I'm done. It's a meme. All right. All right, so what else do we have here? We got the DC shooting news we covered. Let's see here. Officials clashed in investigation of, no way, to Air India, really? When 2 American black box specialists landed, urgent messages arrived on their phone. Don't go with the Indians. What? Kevin, would you ever end up joining a World of Warcraft streamer guild when TBC Hardcore comes out? The soda... Dude, I'd be down. I'd be so down to do that. What's the soda poppin' one? Is that a new thing people say? Like a Mountain Dew poppin' one? Bro, that'd be sick, man. The Raven Eye. Okay, you gotta send me an invite, man. Let's go. But anyway... they wanted U.S. technical experts to take a late-night flight on a military plane and then drive to a remote area. At an aerospace company lab, the experts were supposed to analyze the flight data pulled from the wreckage, okay? But the plan for the recorders worried them. They were worried about the safety of U.S. personnel and equipment being taken to a remote location amid State Department warnings about terrorism, military conflicts in the region. Oh, what the hell? Soda Poppin' is a streamer. Is that right? Is that true? Soda Poppin'? I've never heard of a Soda Poppin', but no, good for them. I guess they're a Twitch streamer. Oh, good for them. I get like 2 streamers on Twitch. I guess the people on Twitch aren't that into news and finance, huh? But anyway, what do we have here? NTSB made a flurry of calls. State Department sent embassy officials to intercept the specialists. So what happened? The investigation has been marked by points of tension, suspicion, and poor communication. This is crazy, dude. So what'd they end up doing it? Insisted, New Delhi. Okay, they wanted it. Give you best chance. Instead of sending them letters, phone calls, threatened to pull American support for the probe. Indian officials relented and agreed to download the data at New Delhi lab. Wow. Wow. Push for the data. That's weird. Like, why? What the sussy baka? You know, this was the fuel cutoff valves here, and this is of course where we think it was basically just suicide. There's a whole story on this. My goodness, this goes on. All right, wild. Let's see what the top comment is on this one. So, this reads like my experience with the Indian government. Proud, deeply incompetent, and full of nepotism. Nothing new here. Somebody else writes, reminds me of hires by the Trump administration. Dude, the comment section, man. That's hilarious. Oh my gosh. Silver all-time high. You know, silver's probably really just catching up to, what's it called? Gold. Gold's been kicking butt. And I don't actually disagree with the guy who says that gold could go to 6,000, just because you still have so many worries about, you know, where we're going with the recession or not. Somebody says, I'm traveling today, listening to you via Wi-Fi, wondering if I could get lifetime access to the AI Reinvest Today. What is operational in the app right now? It says it on the website. So if you go to reinvest.co, it tells you. It comes out in December. And it tells you exactly what you get versus what's coming. So, but it's early alpha, right? Well, we're calling it beta, but it's really like, I should be calling it alpha, but then that would be confusing with the alpha report. Is China winning the innovation race? Oh no, not China. Housing crisis is pushing Gen Z into crypto and economic nihilism. Oh yeah? Let's see what we got here. Rite of passage for housing. Gen Z has had it worse than most. I don't disagree with that. YOLO attitude towards risky investments. Rather than pushing back, today's 20-somethings have tended to embrace quiet quitting. So basically, because it's so hard to buy real estate, the argument is what people are getting into, like, you know, crypto and other things, maybe. Yeah, probably. I mean, that doesn't surprise me. It is unfortunately riskier because if you do end up having a recession, crypto's going to have a really, really rough time. So are many risk assets, everything's going to get hit to some extent. But the volatility will be extreme. Buyout, executive warns, private equity push into U.S. savings, risks bailouts. Oh, that's hot. U.S. Black Friday shoppers expected to spend less. What's everybody seeing for Black Friday out there? OpenAI partners amid $100 billion debt pile to fund its ambitions, right? So anyway, yeah, are we doing the soda poppin' stream? When is BTC Hardcore coming out? Are we doing this? I was gonna write reinvest hardcore. World of Warcraft TBC hardcore. Let's go see. When is that coming out? I don't think that there's a very clear date. I'll let somebody else figure it out. I won't monopolize this time to figure it out. All right, let's see what we have here. Somebody writes about trash sales. Reinvest AI is going to start with single family, and then we'll expand from there. So we still got SMX halt. I've got Symbotic beginning to bleed a little bit. MP Materials trying to reco a little bit. Still stuck at 617. Absolutely unbelievable. And Tesla rejected my line this morning. My 433.99 line. Oh, the rejection. So rude. So I'm going to look at the Tether article with Reuters. Okay. Tether, Reuters. S&P cuts Tether on week. Okay, yeah, well, this is not a surprise. S&P has been going through downgrading MicroStrategy as well. Persistent gaps in disclosures. I mean, this is old news. Everybody knows that, Tether isn't exactly the most transparent company in terms of where they hold or, get their yield, right? Yeah, downgraded. Blah, 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 blah. Yeah, I mean, this is not really a shocker to me. It's unnews. I mean, I appreciate you bringing it to my attention. Don't get me wrong, but it doesn't surprise me. Somebody says TBC Classic Anniversary is coming out. Really? Okay, does anybody have a date? There is no DBC Hardcore? Oh, okay. All right. Very well. So Amazon's AI crackdown hits more AI search startups. What? I don't understand what's going on over here. So let's see here. But yeah, obviously, at meetkevin.com, you have the alpha report on Black Friday. I see someone asking. We're going to have a pretty large price increase, especially on the Reinvest AI, but Meet Kevin's also going to get a big price increase after Black Friday ends. Just a quick shout out to those of you recently joining. Let's see what the ratio is. We got Justin joins Reinvest AI, Francisco joins Reinvest AI, Lev joins Reinvest AI, Jedi Dea joins Meet Kevin membership. Timothy joins Reinvest AI. Sam joins Meet Kevin membership. Richard joins Reinvest AI. Christy joins. We got a girl. Oh, we'll stop reading right there. That's all within the last, hour or whatever here. But we got a girl. Once we get a girl, we'll stop looking at the names. That's awesome. Keep it there. Keep the ratio good. Imagine if we were like a club. Our ratio would be a problem. Our ratio would be a problem. We'd have 9 dudes per girl. I don't even think you could get 9 girls around or 9 guys around one girl to dance. It's just not going to work. So the ratio, we got to work on that. But anyway, Black Friday, one of the biggest shopping days of the year, blah, blah, blah. People are looking for a bargain. They can use Dupe to search for items across shopping sites, including Amazon. Either by typing in phrases or describing what they want. Dupe says tens of millions of sales have resulted from searches. What is Dupe? I've never heard of this. Has anybody heard of this? But that changed weeks ago when Amazon dropped Dupe from the list of companies able to make money from linking shoppers to Amazon. Oh, because Dupe is going to use the affiliate link for Amazon. Amazon communicated its decision to the ad firms that act as intermediaries, say it was revoking access in another move of how Amazon is cracking down on the interactions of outside AI agents and search tools. The shopping giant seeks to figure out how to navigate the new world of AI-driven data commerce. Recently, the company sued AI search engine Perplexity, accusing it of disguising the browser as a human user to get past agent restrictions. But unlike with Perplexity, Amazon wasn't accusing Dupe of doing anything underhand. Dupe's search results could include Amazon products by tapping into a couple of the company's own programs. One is a software that lets devs pull Amazon product listings, and the other is a program that allows websites to insert links and earn commissions. Okay, so basically Dupe is putting their affiliate link in or whatever, and Amazon doesn't want to pay the commission to an AI bot. Got it. Okay, all right, whatever. Big deal. That's just Amazon being a little fussy-bussy, but they got to focus the margins, So what else here? What else? Gentleman's Club. It's a gentleman's club, though. Although we got Christy now. Christy joined us. So that's awesome. Bitcoin set to rally back to 100,000. So yeah, course members get a little bit of a discount on the Reinvest AI, by the way. So if you are a course member, and you want to join the Reinvest AI today on Black Friday, go to the last alpha report. The last alpha report from this morning has the course coupon code in it. Okay, so we looked at CNBC's. Let's go to The Economist. What will China dominate next? Let's see. China pulling ahead. Actually, let me go. Why China's pulling ahead in the robotaxi race? Oh, I want to look at this. And then probably, honestly, regulations are a little easier for China to deal with. And then I also want to look at this. Zelensky says his top aide, Yermak, resigns. Okay. Did we look at Bloomberg yet? Black Friday deals fail to impress price-wary shoppers. Let's see here what this is. This will make people nervous, headlines like this, because people want to see, a prop-up of the economy, a prop-up of stocks. Somebody called Del V says, big fan here, following you since 2019. And this person has a picture of a female in their profile picture. There is a chance Del is a girl. Let's go, girls. I have more girl children than I have boys. It's weird because forever I had 2 boys. And now I have 4 girls and 3 boys. It's crazy. I'm like officially more of a girl dad than a boy dad. I'm actually really excited. Francie, I'm a girl, and I said, oh, thank you so much for being here. Shoppers are generally underwhelmed and underimpressed by Black Friday deals. We are seeing people say they're budgeting more this year. So it's possible that the stock market is going to look for Adobe Analytics and retail sales to see, hey, is the consumer going to keep spending? Keep in mind, if the consumer doesn't spend this Black Friday, the layoffs are coming, okay? So I'm going to write this down. Let's write it down right here. Black Friday. The consumer must spend this Black Friday to prevent bigly layoffs, IMO. So watching those Black Friday stats are going to be pretty important for that. Stocks could move on that. I personally I don't think our sales numbers are a really good barometer of the consumer, because I think people who are buying the Meet Kevin membership or the Reinvest AI, I think these are people who are investing in their education and themselves in the future versus, just buying stuff, right? And you could probably get a tax write-off on it as well because, I'll talk to your CPA about it. But a lot of people write the education products and the Reinvest AI and stuff off on their taxes. Shoppers have mentioned other ways that they're pulling back. Oh, they just refreshed on me, didn't they? They certainly did. How dare they? Okay, whatever. Let's see. Shoppers are budgeting more. They're seeing staffing lighter than usual, more budgeting. Promotions don't offset price increases. I believe that. Soho, very few shoppers, no line despite 30% off doorbuster sales from 7 a.m. to noon. At noon, the discount is cut. What is this? J.C. Penney. Thrilled she found some tall cowboy boots for $19. Originally cost $90. Bro, they never cost $90. It's J.C. Penney. They never cost $90 originally. It's a scam. Okay? The MSRP at Macy's and J.C. Penney is designed to be a scam. So it's possible people are monitoring this. How's Dick's doing? Clutched a bag full of Bulldog's clothes from Dick's. Whatever. All right. Let's get to that Robotaxi article. So, China winning the Robotaxi race. Journey in one of Pony AI's Robotaxis is in some respects familiar to anyone riding in a cab in China. The horn honks just as often. Oh, the horn honks on the Robotaxis? That's awesome. Okay. Yet, as the steering wheel moves on its own accord, the screen shows outlines of surrounding cars, feels futuristic. Pony AI is one of the few Chinese firms that have launched a robotaxi in recent years. Apollo Go has deployed more than 1,000 robotaxi cars, mostly in China. The service, owned by Baidu, hopes to have 20,000 robotaxis operating worldwide by 2027. Pony has launched in 4 cities. I bet you every single one of these, I hate to say it, I bet you every single one of these uses LiDAR. Again, it's not meant to be a diss on Tesla. Okay, Tesla. It is just meant to be a reality statement that it is very likely that every single one of these puppies uses LiDAR. Momenta, an autonomous software startup, is building robots with a state-owned car maker. Xpeng is doing robotaxis. Cusp of a commercial breakout for robotaxi, harkens HSBC. Revenues will grow to $50 billion by 2035, says Goldman Sachs. UBS is even more bullish, forecasting $180 billion by the late 2030s. By some measures, China's robotaxi industry is already pulling ahead of America's. Over 50 Chinese cities allow the testing of self-driving cars on public roads. In at least 10 of them, commercial operations are up and running, twice the number in America. And the potential is vast, with 139 cities with over 1 million people. Bigger opportunity could lie in the rest of the world. China may win the race because of its strong state backing. Right, here in America, the governments are like, no, we don't trust robo-taxis. We don't trust that crap. It's kind of sad. This is how China does pull ahead, is by actually having a regulatory regime that is that induces innovation. Self-driving cars are relatively cheap in China. Waymo spends $130,000 to $200,000 per Waymo. That's why Elon says they are Waymo expensive. HSBC puts the average robotaxi in China at just $40,000 in China. RT6 costs just $35,000. Cars, peripheral, enormous domestic market, fierce competition, blah, blah, blah. Okay, 4 Chinese companies. Okay, what is this? Laser-based LiDARs that create a 3D model, right? Okay. 4 Chinese companies control 90% of the global LiDAR market. Wow. Wow, that's actually impressive. That's impressive. So, hey, Kevin, first time donating to you. Hoping you will look at the issues with CME servers last night. Big scandal in commodities market. Yeah, you know, I did. I looked into this, and there was talk of this. What is it? This one of their data centers went down. Was it Cypress Series or something like that? Anyway, I don't know what the scandal is related to it, or really what to make of it, other than it's back up. So I mean, like, feel free to follow up and give me a guide into what to look at. But I was paying attention to the news when it happened. I'm like, all right, well, data centers go down. That does happen, you know. So, but anyway, is this a Cirrus ad? I think this is a Cirrus ad. Learn to fly. Here, Cirrus aircraft. Holy smokes, bro. There's a Cirrus ad on CNBC. I think that's the first time I've seen a Cirrus ad on CNBC. Bro, Cirrus, the stock has been like skyrocketing too, man. Like, look at this. Okay, back to 617 on the Qs. Come on, baby, let's get a breakthrough. Get a breakthrough. And let's get the China, I think they were, Hong Kong listed or something? Cirrus. Oh, nice. It's actually come down a little bit recently. But this is a great company, man. I freaking love this. Somebody says, I love China, but I'm not a communist. You know, it's sad that, I guess we have to, do we have to, like, separate those things? Like, so, you know? It's like, can you like China? And not be a commie? You know, I don't know that those have to be linked. China's robotaxi haven't turned a profit. Pay is low for taxi drivers, right? Because they're actually competing with very inexpensive labor, right? We Ride Pony several years away from making a profit. Crumbling share prices. Investors don't expect these startups to generate cash. Well, that's not great. Okay. Goldman Sachs expects robotaxi industry in China to break even on operating profits. Difficulty reaching customers may present at a challenge in China. In America, Uber is opening its base to robotaxis. I think this is brilliant. Like, the fact that they have the app mindshare, that's the win for Uber, right? All right, so, yeah, I mean, the CME outage, take a quick look at it. But, I mean, it wasn't... I mean, if you were trading in futures, it'd be a giant pisser, right? Futures markets were thrown into chaos this morning. Knocked out for 11 hours, according to LSEG. They blamed, there it is, the Cirrus 1 Chicago area facility had been affected. A cooling failure. Okay, long vertiv, is that what I hear? Water cooling, please. Disruptions stopped trading in major currency pairs, as well as benchmark futures for crude. Thinned out already on volumes, but this is now a black eye for CME. Complacently taken for granted. Having said that, could have been a lot worse. It'll be a low volume day. Right. I mean, people are on holiday. People are, you know, focused on Black Friday. Black Friday sales! Sell! All right. You know, what we need bullishness. That's what we need around here. Oh, we're testing that. Hold on, boys and girls. Let's get some music. We are breaking out on 6/17 on Black Friday. This is bullish for the stocks. Can we hold 6/17? If we could break out of 6/17, boys and girls, we got a line that we're talking about in the Alpha Report. We've been watching 6/17 for a while. This is a big boy right here. 6/17. It's also good for Tesla. Look at this. Tesla slowly coming back to test 433.99. Nvidia still on the profit take side. Google's also getting a little bit of the profit take. If I look at, let's see here, GameStop up 3%. A little bit of a run there after the Burry mentioned this weekend. Circle pumpage. Look at that Circle pumpage. Wow. Perfect bounce on Circle. They did 100% retracement. They literally retraced 100% down. Like full circle retracement here on Circle. And they are popping off right now. Let's pay attention to Circle. Let's move Circle up a little bit. 11% on Circle. That could be interesting. Nice rally there. Look at that volume coming in on Circle. That one's been left behind, hasn't it? Lucid, Owl, Webull. Webull still under 10 SPAC price. We've got Figure Tech up 4%. Lone Depot up a little. United Wholesale up a little. Where's RK Tizzle today? RK Tizzle, almost $20 on RK Tiz. Nice. Snowflake, Jack in the Box, Pins, Axons, a little Intuit, right on the 630 line there. Okay. Okay. Palantir, trying to catch a bid. How about Hood? Can we get a Hood bid? Well, we were up at what, 130 there for a moment? Yeah, look at that right there, 130. 127 line, riding the 127 line. That's good. Good. 1 minute chart, nothing impressive on the 1 min here. I like this breakout right here. This is definitely a
bullish catalyst. Bullish catalyst.
That's awesome. Charles says he's going to miss this story. You can't be serious. I just asked you. Tell me what the problem is. I literally looked at your donation. I'm like, tell me what to look at. And instead, you just go dark. I can't believe he's going to miss it, man. F off then. Like, geez, man. It's almost like you're trying to make a story out of nothing then. You're trying to make a story out of nothing. Oh, let me go try to manipulate Kevin. Yeah, suck it. All right. What else do we have here? So FT, we've got China on the innovation race, cruising along the highway. This is going to be more about FSD, R&D spend. All right, whatever. The information. Bro, where's the news today, man? Where's the news when you need the news? Donnie T, Sarah's dead. She's dead. That's what he said yesterday. We saw that. It's terrible. What is this? This was the death toll on the Hong Kong fires, now 128. Wow. 128. And I think a bunch are still missing. That's just sad. So I think it's probably going to end up being over 200. Yeah. Just wild. Shoppers' holiday spending could keep the economy humming. Maybe if people actually spend. What is this? Hudson Yards. Okay, what do we got? MasterCard estimates holiday spending will rise 3.6% this year. Americans are nervous about the economy, poised to shell out during the holiday anyway. Then you've got economists are predicting a healthy dose of consumer spending. So, I mean, that could set up for a disappointment, right? So let's write that down. The MasterCard expected spend. So, oh yeah, and then Robotaxi. I'm just going to make a quick note here that I thought that piece was very interesting. 90% of global LiDAR market is controlled by China. Okay, Black Friday spending. MasterCard's expecting 3.6%. The problem is 3.6% is probably just inflation, you know? Wealthier households are expected to buy freely, offsetting slower spending down the income spectrum. We'll see about that. Economists are expecting momentum heading in the right direction. Somebody here makes $65,000 a year as a manager at Amazon. Salaries enough to rent an apartment in Portland. $227 a month in loan payments. That sucks. So plans to spend $500 on holiday gifts. Dude, I hate gift shopping. Absolutely can't stand it. Most of the spending has been driven by affluent customers. Top 10% are powering nearly half of consumer spending. Old news. Lower income, more affected by price increases on groceries, gas. Yes, we know. Okay. What do we got here? A quarterly report on household debt. Americans across income levels held more in deposits in October than they did on average in 2019. And that it did not appear to be dipping into savings much. Well, that's great. That's great. So I'm going to write that little note down there. That's a good one. So we have New York Fed indicates in October, Americans held more in deposits than on average in 2019. So that's great. That's a great stat. That is bullish. Press the button.
Bullish catalyst.
No, the other button.
Welcome. Nice to have you. You want to talk about lovemaking, right?
Yes. Correct. Lost a job at a bank branch. Car broke down. Didn't have enough money. Yeah, that sucks. Top 10 comments. Sort by oldest. Personally, I'll be shifting all my gift spending to local businesses this year. Meet your local YouTube business right here. Meet Kevin Alpha Report, Black Friday sale, big price increase, new courses included. MeetKevin.com. Reinvest AI is going to get a bigly price increase as well at reinvest.co. Support your local YouTube business. I don't think people are spending heartily. Too many thousands of people were laid off and living off credit cards. We'll see. We'll see. It's possible that maybe that's, going to keep some markets a little nervous here. Okay, so let's see here. Black Friday deals. We saw that the fails to impress. Fintech Pagaya hikes pricing on $399 million subprime debt deal. What? How is there demand for this? How is there demand for this? So he says, what? Lovemaking? That Sarah said it. Okay, not me. Sarah said it, not me. The Russ Moment says the Meet Kevin Corporation. Nah, man. The money going into house hack, boss. The revenues for Reinvest AI and the Reinvest course go right into house hack. So let me see what Burry just said. Pull up Burry. So let's see here. Burry. All right, let's see what we got here. So yeah, if you're an investor in house hack, it's good for you. All right, so what is this? My $19.99 free to all. Man, this guy's really pumping his Substack, huh? So this is $19.99, Buffett revisited, walking to the clinic, portion. I mean, this is basically just talking about how he was into the gold bubble. Or, sorry, into the .com bubble. I mean, I think he's really just trying to prop up his Substack right now because he's gonna be able to move markets with that, right? So, yeah, that's not much of a tweet. That's just sort of like a reference to the old, not to the new. All right, what is this? Because this could be a liquidity sign. They're saying it's a big sign of the market breaking. Really? Your YouTube keeps kicking you out? Okay, I believe you, Charles. Charles? You know, I actually believe this. It could be delusional. But I bet I could sit down with anyone in this chat for a coffee or beer or whatever. You know, who knows? Maybe no drinking, whatever. And we could get along. I'll scream on the live stream. There's only one reason we keep this. It's actually like the magnetic bottom part of the keyboard, but it's so great. It's perfect for anger. It's like Kevin's stress ball. CME market liquidity but it was already a low. I mean, they're blaming the liquidity issue on low volumes. Are you maybe saying that it's a bigger sign of liquidity stress? But why would this, because they're just arguing this is a data center problem. You know, not like, I guess I'm not seeing how it's related to something bad about the economy. You know what? I'll go to the most jaded AI that exists. Dear Grok. Yo, I got this guy named Charles. He's probably a good dude, but he's freaking out in my live stream saying that the CME server outage this morning is some sussing of the market getting ready to collapse broadly and all hell breaking out plus recession and death and decay. Help me explain to Charles why I feel like this doesn't matter unless I'm missing the boat, which maybe I am. There. How's that for prompt engineering, boys and girls? How's that? Nobody prompts engineers better than me, Kevin.
Fantastic color court. We're going to come back to you in the time we have left, that's for sure, Courtney.
Dude, somebody needs to go find where she is and photobomb CNBC. That'd be so funny.
S&P both look to avoid snapping 6-month win streaks of their own. What might we expect in the final push into year end? We're joined this morning with his outlook, Morgan Stanley Wealth Management Senior Vice President Jim LeCamp. Jim, it's great to have you back. Thanks for being with us.
Of course. Good to see you.
I like this analog of a bull, but
all right. So Grok thought for 23 whole seconds on this. Okay? Grok is giving you 23 seconds of its time. Hey, Charles, And yeah, props for tuning into the live stream. Hope you're chilling now. Let's break this down real quick on the CME outage this morning. I get why it sounds sketchy at first, like some omen of doom for the markets, a recession incoming or whatever. But based on what actually went down, it's probably not a market apocalypse signal that you're thinking. Here's why I feel like it doesn't matter much in the big picture, unless we're missing. I mean, this is just giving me some script. Did it actually research this? I think it's fully retarded. If it just is just giving me a, oh no, it actually did put some quotes in here. Outages happen, it's not new. Remember the NYC halt of 2015. CME has had issues before. It's all fixed now. It's frustrating, yeah. Timing was kind of lucky because it was a low volume time anyway. Low liquidity, screwed up spreads. No, purely infrastructure, nothing fundamental. All right. So Grok expert is not worried. So if Grok expert is not worried, I don't know, is that like, do we inverse trade this? Like, should we be shitting bricks right now? Anyway, what is this? A fintech raised $399 million through bonds tied to subprime auto loans. How? Who buys this? Who is buying this? Why? Why are people buying this? Why? Pagaya Technologies was forced to offer, was forced to offer higher rates. Good. As the lender faced heightened scrutiny. Good. But they still raised it. Steve, we looked at this article earlier. Steve, I appreciate your 10 Canadian dollars. I could go to the dollar store in America. I could go to a Freedom dollar store with this. Thank you. But Steve says, Charles is a good dude and is freaking out in your live stream about CME. Can you check out the Reuters Tether article called Has Gold Been Tethered? I guess I looked at the wrong one for you. Has gold been tethered? I will tab it up. But first I want to know about papaya. Fintech raised $399 million through bonds tied to subprime auto loans in a 7-part offering. They had to do 7 parts. Okay. The largest tranche of AAA rating. Oh, yeah. Okay. We believe it. AAA rating. Okay. Price at 1.5% above the benchmark rate. Compares with previous guidance of 1.25 to 1.3. Oh, that's not that much more. Pagaya's aggressive originate-to-sell business model has drawn increasing scrutiny after the sudden collapse of others. Yeah, but the fact that they still raised it blows my mind. Blows my mind that they still got this money. How, dude? How do they still raise this? That's actually, honestly, bullish liquidity, frankly. It means people are still buying this trash. So, let me see here. Okay. Private credit. Private credit. Pagaya, auto loan issuer and reseller, raised $399 million for subprime auto loans. Did have to increase bond yield, but they still closed $399 mil. Okay, my opinion, like, I hear this, I'm dying inside. How are people still throwing $399 mil at this garbage during private credit fears? You know, the disaster we've been through now with private credit. It blows my mind. But apparently people are. I don't get it. But it's happening. So, wild. All right. So the Alpha report this morning talked about 617. We've broken through. This is
bullish catalyst.
And so now if we hold this, we should get Tesla 433. Come on, baby. We going back. Okay. 617 break on the Qs. 433.99 on Tesla, baby. That's the trading pair today. 617 breaks, Tesla 433.99. Come on, baby. Let's go, let's go. We got, it's an early market close today, okay? Yield is highly attractive. I know, that's what gets people in, right? Like, so people, people justify it with the high yield. All right. So, what is this? Has gold been tethered? Apparently, I need to reactivate my subscription. Well, that's bullcrap. Hey, I could take your 10 Canadian dollars and reactivate a subscription. No, actually, I pay them thousands of dollars a month. The fact that the Reuters website isn't logged in or saying that or whatever is annoying. But it's okay. I will go into my little portal and we will get there. All right. Let's see what we have here. So, search. Come on, buddy. Gold been tethered. All right, let's get past the paywall, baby. I pay for it after all. Has gold been tethered? Here it is. Oh gosh, why is it so small? I must be getting old. For investors buying gold as a bastion of stability, it should give pause to one of bullion's biggest buyers in recent months. It should give pause that one of bullion's biggest buyers is a linchpin of the world of crypto. The narrative for gold's record-breaking surge usually has to do with concerns about high public debt, lax monetary policy, or a loss of faith. But who's buying it? Until recently, the focus has been on central banks. Many of them were unnerved about the U.S. freeze. Okay, hold on. Let's write this down. Okay, let's write, because Steve doesn't pound the table this often on stuff. On gold being tethered. Okay, so gold running. I mean, this is the typical narrative. Gold running on narrative of central bank, especially Chinese buying, debt fears, inflation fears, and recession fears, right? That's been the narrative. Okay, fine, I agree. But, oh yeah, and then of course also Ukraine. Russia, SWIFT didn't help, right? Hey, Kevin, for Symbotic, what's your price target to sell? If you're trading, it's now. Symbotic is probably going to demomentum and get back down to 53 to 64 is my opinion. All right, so what does this say here? What almost escaped notice was another major buyer of the middle of the year was Tether. Okay. Tether and XAUT, this is gold-backed Tether, have been big buyers. Okay, Tether holds about 14 billion gold held by Tether. Wow, that's a lot. And then we have gold's meteoric rise. Comes in two waves, blah, blah, blah. Jeffrey's team points out the rally lined up with Tether's pickup in gold buying. Oh, wow. Jeffries argues rally in gold aligned with Tether buying. That's interesting. Tether's demand tightened supply in the short term. As to whether it could be continuing, gold may have risen as a percentage of reserves. Let's see here. Less clear. Well, let's see. Entangled heavens. Broader intertwining of gold and crypto makes ideological sense, but they're very different animals. Recent price moves, underline, blah, blah, blah. Periodic sense of stress in crypto is a sign of life. Jeffries expects further gold demand from the stablecoin world. Huh? All right. That's very interesting. That is, I mean, it's interesting. I don't know that it's like a harbinger, but it is interesting. All right, great. Now what else? Okay, let's see. What else do we have? We got CME restarts operations. Zelensky aide quits. Some Ukraine corruption allegations. Oh, you know what we have for corruption, right? We got a line for that, baby.
Corruption is not bad. Corruption is only bad if I'm not involved.
Okay, Rolex and gold gifts to Trump. Spur call for Swiss criminal probe. U.S. shoppers underwhelmed by deals. More affordable holidays. Blah, blah, blah. Let's see here. Fintechs race to loosen big bank script. Big deal. Man, bro. Where the news, dog? Cowbells, Cowboys. All right. What we got over here?
Monday. But it's really a promotional period that's very important for retailers globally. And
yeah, sure. Okay, talking about Black Friday promotional period. Big freaking deal. Come on, homies. You got a shortened stock market day here. But this is bullish, by the way. The fact that Papaya is able to raise this money, and absolutely shocking, honestly. Black Friday deals, very cold day in New York. Are they actually trying to like cover for? Oh, well, maybe the sales are bad because it's just cold in New York. Okay. Yeah, I don't know how I feel about that. Okay. Let's go. The Journal. Okay. DC shooting suspect. Air India. We saw that. The Untold Story of Charlie Munger. We've seen that. Okay. Okay. Let's go. Let's go. This is all alpha right here this morning. Come on, baby. We're still holding 617, although we're already consolidating. The Tesla, right back to it. Let's go. 433.99. Maybe if I look away, it'll get there faster. All right. What else? So, Reuters. Trump vows to freeze migration from the third world. Whatever. Okay, we saw this. We saw this. What's CNN got for us? CNN. U.S. land action in Venezuela will start very soon. Are you serious? We had the CIA thing. CNN, AI and the environment. Hong Kong fire.
Trump says the United States will strike inside Venezuela, quote, very soon. He made the statement while speaking to members of the U.S. military on a Thanksgiving phone call. Have a listen.
And in recent weeks, you've been working to deter Venezuelan drug traffickers, of which there are many. Of course, there aren't too many coming in by sea anymore, if you probably noticed that. We'll be starting to stop them by land also. The land is easier, but that's going to start very soon. We warned them. Stop sending poison to our country.
That's going to start very soon. Oh, that is interesting. More. What happened to no more wars? No new wars. All right. Axios talking about robotaxi. Here's another take on Trump's comments yesterday. Permanently pause migration from all third world countries. And that's also like the PC way to say it now. I mean, most people don't care, but it's technically supposed to say developing countries. So, all right. Talking about the Macy's Day Parade. Al Jazeera, give that a refresh. And the FT over here. Take a look over here as well. Zelensky aide bails. He's dipping. Yermak has resigned after anti-corruption officials raided his residence. Oh, no. Oh, they raided him. Oh, man. Check out the sneaker video on X saying sneaker sales have been down. How am I going to look that up? Just like X sneaker sales. Sneaker sales. Sneaker resale prices plunged below retail in California shop. Sneaker market was never a real. Oh, this is just like a big like trend right now to dump on sneakers. Huh? Okay, got it. Zelensky is grateful for but they need unity. Closest confidant weakens Zelensky. Yermak has been appointed by Zelensky just over a week ago to lead peace talks. Whoops, and now he's gone. Interesting. They likened Yermak to a VP, even saying he behaved like a head of state. Wow. Well, that's a big loss for Zelensky, isn't it? Wow. Okay. All right. Politico, what do we got over here? 220 judges have now rejected Trump's mass detention policy. Okay. Cinema ready for her Make America Healthy turn. Man. All right, what's Flexport guy saying?
On that, that's going to keep coming back unless they spend tens of billions of dollars re-engineering the water flows in the canal, which I don't think they're going to be able to do.
That's on my bucket list, to go through the Panama Canal. It really is. It's
you better pick your container ship wisely then, Paul, because you're not getting on all of them.
I know, exactly, but I'm ready to do that. Talk to us about inventory levels, Ryan. I mean, are retailers, are they stocking their usual amount of retail inventory, or are they going a little bit light, or what are they doing?
No, in fact, you could argue they're going the opposite. They're going heavy on this year because not so much because of the uncertainty of demand, although that always exists, but because of the tariffs. So everybody front loaded, these reciprocal tariffs on rest of world ended August 29th. And you had a couple of months to know that was coming. And so everybody brought all their inventory in early. And what it's going to look like is you can never really predict what's going to be a hit product and what's not. And so you're going to have stock outs on certain hit products because it's now much harder to replenish. You're paying higher duties. And so you're going to have stock outs on some of the hit products. And then I suspect you're going to have quite a bit of overhead of products that didn't move. And you'll probably see some good deals coming in the beginning of next year. I mean, we may see some right now with Black Friday, but usually these things play out into the Q1 period once the holidays are over.
All right, Vonnie, here's the book recommendation of the day for you about the Panama Canal, The Path Between the Seas.
We're going to look at Bank of America here in just a moment. Also, shout out to those of you who just joined Agiani. Agiani, welcome aboard. Lifetime access to the Reinvest AI. Joe joins Meet Kevin membership. Welcome aboard. Mr. J joins Reinvest AI. Welcome aboard. Now remember, it's lifetime access for the AI product at reinvest.co or househack.com. You read about it there, but it's pretty great. We're actually seeing more people also increase their investments in Househack right now. I mean, I saw another like 6-figure wire just come through before I went live. I've got King L Reinvest AI, welcome aboard. Meet Kevin membership, Oscar, welcome aboard. Benjamin, Reinvest AI, welcome. Justin, welcome aboard, Reinvest AI. Francesco, welcome aboard, Reinvest AI. Nice, welcome. Those are all just in the last little bit here, last 45 minutes. Thanks for joining. We'll take great care of you. Let's now go look at this Bank of America piece. Bank of America. So sneaker video is by user. Okay, I don't like to talk bad about anyone, but I cannot stand watching that guy's content. Sorry. So I purposefully scroll past. I can't handle it. Can't handle it. Yeah, we're gonna do live streams and what will happen is with the Reinvest AI as the app launches in December, probably in Q1 we'll start doing like live stream analysis of deals as well with it, which will be really cool. But we're not gonna do that probably until late December or January. So, by then the price will be a lot higher, hence why we're doing a foundation membership now, because there is no demo yet. And once we start demoing it, where the price is going to be a whole lot higher. That's the whole point. ETF inflows offset single stock outflows. Last week, clients bought U.S. equities led by big equity ETFs. But single stock outflows also occurred. Interesting. I think this is people this is actually smart. This is people making a smart decision here. This is really diversifying, right? So you're moving away from some of those single stocks. You're diversifying a little bit. That's good. Hedge funds. Let's see here. U.S. former stock versus institutional. Institutional clients buying solely driven by ETFs. Institutional clients have started buying dips this year, while private clients have been the most consistent dip buyers since COVID. But private clients were sellers for third consecutive week as single stock sales offset ETF purchases. And it's smart. You're making your portfolio a little bit more resilient for a downside. That's what this is. This is resilience building, is what I like to call it. Somebody says BTC is dying. Uh-oh. Let's see here. Somebody says hearing about house hack is fair payment for the free live streams. Well, thank you. It's a fair transaction then, right? It's a win-win transaction. It's my baby. I love it. I want to build house hack for 60 years. I throw so much money at house hack, just myself, just because I'm that's I can see where we're going. It feels like insider info, but it's not because I'm so transparent about it every day. It's almost like if you're Jensen, in 2022, you're like, dude, I got to buy a crap load of this stock. That's what I feel like with house hack right now. Corporate client buybacks accelerated third week to an 8-week high, but the trailing 52-week buyback has been declining since March. Why are the buybacks slowing down? Now that's interesting. This could be a weakness for 2026. Potential 2026 weakness, lack of buybacks, right? Okay, so tech outflows. This is probably profit taking. Probably. Somebody says market just took a poop and all markets are reversing. Oh no! Oh come on! What? You gotta be kidding me! I mean, we lost the line. I'll do it for the line.
Lost the lead.
No.
Fetch me. Betrayal.
You are not prepared.
Sync rate.
Kiss it bye-bye.
Pull up. Pull up.
Damn. What is happening? Okay. Well, let me see if there's anything that the suits are saying. Oh, man. Let me see here. When will we be able to see first and second round investments in one place? Probably next year. I'm just being transparent. There's zero rush for me to deal with that right now. There's zero interest or rush for me to deal with that. So you can see your stock cert from round 1 and round 2. I appreciate you being an investor in both rounds. But the focus right now is our AI product, our infrastructure for AI. Business stuff that's time sensitive. That's what our focus is right now. We got 11 renovations going on. We got a lot of work going on. Let's see here. Plenty of cash on the sidelines to support an equity market rally, but that support is unlikely to materialize until the new year. Total net assets held in money market funds has reached an all-time high. Wow. I gotta write that down. Let me get that data point. I think that data point's very interesting. Okay, let's go here. Let's throw it right here, and let's go. Money markets just hit all-time high at 7.54 trillion. Markets moved beyond the initial risk-off phase of recessions and rate cuts began. Money typically flowed out of money markets as falling yields made them less attractive. Okay, got it. Right. I mean, this makes sense. Takes falling yields to really get people to move out of money markets per investment company institute. That dynamic is not playing out. Rate cuts are, moving very slowly. So rate cuts moving slowly. You've got unease around delayed data and lack of data. Let's see here. Holding cash makes sense until we get more clarity until the new year is the idea. Okay. People are holding cash until we get more clarity. Okay. Now, what about the Bank of America piece? So Bank of America piece, Bank of America sees single stock selling and ETF buying last week. To me, that suggests risk reduction. All right, that's roughly what we're seeing here. Okay. Save that. All right, let's go back to that Bank of America piece. That's right here. Profit taking. Consumer discretionary stocks saw the biggest inflows. Yeah. We have seen a bounce in consumer stocks. We're on day 5 right now of consumer stocks bouncing. Clients bought a blend of value ETFs, growth ETFs. Tech saw the biggest outflows. Okay. Private client. Institutional clients are still the biggest net sellers over the last 12 months. That's interesting. That's a very interesting and neat chart. Bank of America total net buys of U.S. equities. Volumes, cumulative flows by years, blah, 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 blah. These are just the charts. Small cap, mid cap, hedge funds, single stocks, consumer discretion, materials. Okay. Client buyback. Oh, where was the buyback chart? Corporate client buybacks have normalized. Peaked at the end of February, declining ever since. Why wouldn't they show 2008? Look at that. Buybacks dumped around COVID as well. Buybacks dumped around COVID as well. I wonder if I could Google that one, because that is interesting. Corporate buybacks. Let's try St. Louis Fred. St. Louis Fred. Non-financial corporate repurchases. Well, why is this chart ending in 2024? Next release, DC11? I mean, obviously, you see a slowdown before recession. Let me look at this area here. Yeah. So you peak out. You definitely peak out about 2 years before recession. That's interesting, actually. In 1999 and in... I'll write that down. That's very interesting. So Black Friday, blah, blah, blah. Let's drop that in right here. Okay. Corporate. Let's write this down. Corporate buybacks peaked about 2 years prior to recession, which would be about 1 year prior to stock market peak, right? Because the stock market usually peaks before recession. And if you look here, we just hit another peak. So let's jot that in. That's quite interesting. Okay, back to 617. Let's go.
Pull up.
Cockpit Karen's working overtime. Okay, so we had a February peak. Feb peak in corporate buybacks. Down since. Okay. From Melbourne Beach, Florida. That sounds beautiful. Good for you. What's up? Beach bum trading. What up? All right. What's going on with the sticks? Okay. Okay, back to 617. Careful. Yeah, look here. This is a double rejection. Just can't get to 433 today. Twice rejected at 432. Twice on Tesla now. Damn. All right. Gotta love Betty. Bitchin' Betty. Yeah. Everybody, I guess the airline industry calls it Bitchin' Betty. I never knew that until I started calling her Cockpit Karen, and I was with another pilot, and they're like, well, who's Cockpit Karen? And you're the lady. And, oh, the airlines call her Bitchin' Betty. And I'm like, oh, I didn't know. I thought I was clever coming up with a nickname for her, and I guess people already had come up with a nickname for her. Oh, well. Okay. So, I do think that this corporate buyback thing is going to be something to watch. I will put a note here. Resilience building. Okay, we got that. All right, let's see what we can grab here. I do also think this private client buying by Bank of America is very consistent with what retail has broadly been doing. There's been very little hedging. It's almost like you could use the phrase zero hedge. I actually like zero hedge. I think they do a good job. Let's go look at them. Let's go look at zero hedge for a moment. Zero hedge. What do you guys got? Oh, let's see here. Zelensky's closest, most powerful aide resigns amid anti-corruption probe. Oh no! His downfall could undo an already shaking alliance. Oh, wow. They had pictures of the raid. Wow. Yeah. Interesting timing. Yermak swears no concessions. That's also interesting. Like, as the like negotiation is going on and he wants to hold firm, you know, he gets squeezed out. You know, it could all be rigged, right? Like, think about it. Just like the jaded point of view on Yermak. Okay. Yermak gone in Ukraine, you know, seen as VP, and it, like, watch this, as Ukraine digs in on not giving up, you know, land, etc., against the U.S.-Russia plan / you know, concept of a plan, all of a sudden, a top dog gets raided by an anti-corruption probe, which, even if he's innocent, makes him seem guilty, and he resigns, right? So, like, somebody who's pushing for the deal not to happen basically got squeezed out. It definitely smells of some rigging, you know? Somebody here says, spot on, Trump is Putin's bitch. Oh no! What are we not prepared for?
You are not prepared.
Alright, let's go back here. InfoWars level nutters at zero hedge. Yeah, a lot of people don't like them. I've noticed that. Deepening K-shape. Damaging grade inflation. 60% of grades are A's. Grade inflation. Goldman sees clear start. UPS indefinitely grounds MD-11s. Alright. Okay. Somebody else says the system's already rigged. It's all rigged. It's all rigged, boys and girls. Alright, let's go see what another institution's saying here. So that was BOFA. Let's go look at regional rotation, city research, macro think tank, AI productivity. I got to get some more coffee and go to the bathroom, but let's look at this first. All right, what do we got here? U.S. productivity and the AI revolution, baby. Current cycle, investments in AI versus productivity growth. Labor productivity growth. Well, that looks like absolute trash. But that labor productivity growth, that's a 1995 to 2000 chart. Okay, so where's the current cycle of labor? Let's see. Patterns suggest AI investment has further to climb, and that AI productivity gains could materialize in several years' time. Bro, I don't have several years of time, damn it. Kevin, what's your Tesla referral code? Oh, he's gonna buy a Tesla after the tax credits expired. You know what I hear when I hear that, right?
Bullish catalyst.
No, I think it's meetkevin.com/Tesla, but I think it's capped. Yeah, I think I'm out. No, so that doesn't work. Let me try metkevin.com/Tesla. That works. metkevin.com/Tesla. But I'm limited. See, look at that. Kevin's referral limit has been reached. What a fraud. Like, how much can I shill Tesla and then I get cut off? You know, I guess I'm such a Tesla shill that I just get cut off. How could you cut off your favorite shill? Niebel donates 5 gift memberships. Oh, that's quite nice of you. What is this? Whatever. You can still support the channel by going to meetkevin.com or reinvest.co. All right. So we're going to keep reading about this. I got to go to the bathroom. I'll be right back.
How much would you want discounted, let's say? So
all of it.
You're taking over the whole mall, right? I'm still trying to...
Damn, she just got her hair done. Looks good.
In order to make this work, and what you would need from the mall operators in terms of a deal, basically.
Yeah, great question. So the average CapEx to build an urban air is just around $3 million. And that's actually come down about 12% over the last 12 months in spite of inflation. And that's come through our value engineering and us optimizing key roles in-house like engineering and construction, as well as optimizing our supply chain. So we're putting about $3 million into each of these locations. So we're absolutely asking for landlords to partner with us in the form of tenant improvement allowance, free rent, things of that nature, because we know that the 17 million foot traffic that we've brought to our over 210 locations this year gives great exposure to the co-tenants in the center.
Yeah, exactly. Yeah, well, listen, great idea, and I'm definitely going to try one, an Unleashed brand.
My kids are all grown, so I don't have to do the birthday party thing. But
you don't have to do the birthday party, but that's even better.
And thing, you know.
Yeah, we can still go, though.
Yeah, all right.
It doesn't matter what age you are, right? We're all kids when we go into an Unleashed mall. So thank you so much to Michael Browning Jr., Urban Air Adventure Park founder. All right, we're going to continue speaking holiday shopping in just a moment. We obviously are going to talk about economic concerns as well this holiday shopping season.
Formula One has never been more competitive. If you're standing still, you're actually going backwards. We're trying to beat our competitors on the track, but to do that, you need to be able to beat them off the track. We need to work with best-in-class partners in the technology space to help us go faster and make all our investments bring performance to our race car. Workday is a critical partner of ours to help us forecast and help us run the most efficient business possible.
For short sellers. That's all Workday is. Critical stock for short sellers. Freaking plummeting dumpster fire. And I want to look up Adventure Park, too. I was listening to that guy talk about it. Workday, look at it. It's been sideways for 5 freaking years, dude. 5 years. How is the stock sideways for 5 years? Adventure Park. I want to go on adventure. Disney California Adventure Park. Adventure Park. Adventure Park is a place that contain a variety of elements, including obstacle courses, bouldering, rock climbing. I love this stuff. That's cool. All right. Let's go back to what the institutions are saying. Meet Lauren needs a Tesla referral link on your family's map. Bro, we have a Cybertruck, a Model X, a Model S, and we bought a Sprinter. Why? Because we need the room. We need the Robovan. Yeah. Yesterday, I was trying to teach Jack how to drive. It's probably a really bad idea, but it was really funny. So, you know, if an idea is bad, but it's funny, it's okay, right? I think that's how it works. But anyway, I thought the safest way would be for me to put Max on the hood of the Model S and then put Jack in the driver's seat of the Model S and then me just watch from outside. And it worked great. I had the Meta glasses to document the scene. But anyway, we do need to go back into this this here. New technology. Okay, so we're going to get back into this report here. And let me see here. Do I have this, though? I do. Yeah, it's so dark, though. You can't really see. Here we go. This is Jack backing up against the Model S. You know, almost ate the curb there. Max is literally sitting. I don't know if you could see it. He's literally sitting right there on the hood. So, true story. And Jack's like, Dad, I accidentally set the blinker. So I try to teach him how to straighten out. But he actually did a great job. He didn't damage my rims. And he got the car nice and straightened out. And out of the little red. He actually did pretty good for a 10-year-old. So I'll give him credit. So he's like, bro wasn't lying. I know, right? So new technology, however, takes time to permeate in the economy, electricity, blah, blah, blah. Historically, technology needs to reach 50% adoption threshold for productivity to inflect higher. Bro, everybody uses it. Everybody uses AI. So along the lines, it remains early days for AI. A survey we conducted for a report found 5% of companies have fully scaled AI. This figure's moving up. Market pricing, back over 50% for a cut. Equity sold off because of Powie Wowie, but Williams talked it up. We said that. Remember, when the ADP numbers came out, ADP Jobs Day, Kevin said, watch for Fed to talk it back up. And it's exactly what happened. Okay, labor force participation rates started to rebound higher in September. If this continues, unemployment... Yeah, this is a red flag, right? This is a red flag. This is probably the biggest red flag, okay? Probably, outside of layoffs, probably the second biggest red flag. So if we had red flags, let's list red flags, okay, for giggles. We'll call it the red flags of recession, okay? We already know layoffs, but productivity matters, participation. Participation rising, right? And especially the early retiree boom. 27 weeks unemployed. What else? Well, private credit and liquidity. I'll put those together. Private credit and liquidity. I kind of argue that those are sort of together. What else? Anybody else have any others? Retail sales, stocks. Stocks falling could be. Not yet, obviously. Not yet, but stocks, a stock crash. I'll just say not now, because yet implies that it will, but we don't know that it will. There's plenty of cash, obviously, on the sidelines. Okay, so, all right. I think that's pretty much it. Obviously the Fed being too late. Fed exacerbating with too late. Okay. I think I spelled that wrong. I feel like I'm missing a letter here. That's just not a word I spell on a regular basis. Oh, damn, I spelled it right. Oh, wow. Man. Now you got to join the Meet Kevin Alpha report. Oh, man. Oh, if he could spell exacerbate right. Oh, imagine what else he could do. Oh, damn. Welcome aboard, by the way. Carlos just joined a few seconds ago, and Matthew a few seconds ago. Both of you joined Reinvest AI. Batty. Oh, that's an awesome name. Batty joined Reinvest AI. Jonathan, Miguel, Justin, James. Welcome aboard. Thank you for joining Reinvest AI. Remember, there's also a sale at meetkevin.com. Don't forget, you can use the Black Friday sale before the price skyrockets to justify the new course that we just came out with over at meetkevin.com. But whatever. And see, this is the problem. You know, I introduced a lifetime access to our AI product at HouseHack, and all of a sudden it's like 9 out of 10 of the sales are the AI product. And I'm like, bro, what? Don't forget Meet Kevin. Anyway, it's fine. It's fine. So, can you talk about the Japan carrier trade? You know, we talked about that. But we talked about that a bit ago. I mean, I guess we could include the sudden reversal in yen USD, right? Potentially, right? Debt would be another one. Now I forgot. I can't believe I forgot debt. Margin, right? Leveraged ETFs and otherwise. Yeah. All right, we are 8 minutes away from the final hour. 8 minutes away already from the final hour. How crazy is that? How are the sticks? So we are looking at Hood's flat, Circle still up 10, SMX keeps running on its meme play. QQQ A 617. Let's go. Woo! Bitcoin though, come on, man, step it up, homie G's. What is this? What is this? All right. Lunar is down 44 basis points, core weave. Okay, so what about, what's another risk catalyst? Oh, the lack of spending on AI, right? Spending slowdown in AI. That would be another good one. Keep throwing these at me. I like this. These red flags of recession, okay? I'm gonna be honest here, okay? I need a title for this damn video. So I need step it up. Okay. We continue to have a steepening bias. For example, latest rebound of labor force participation opens the door for the unemployment rate to go meaningfully higher. If that's definitely not green. If we keep increasing towards 2023 levels. Right. World War III. Okay. All right. Yeah, war with Russia. Okay. World War III. You should do an investor conference at some point. Yo, where were you when I did the oh God, what was it called? The Millionaire Symposium. That was last year. People really liked that. You know, we had Kathy Wood there too. That was fun. Oh my God, but it was such a pain in the ass to coordinate. Possible catalyst for the Fed cutting. Strong core CPI. Okay. Because of inflation. Yeah, too late because of CPI. Yeah, true. Fed not cutting. Yep. Home builders failing to make a new high is a red flag. Why? Jake, give me a reason. Okay. You know what I would do is in the future, when Househack goes public, I'd be down to do like annual shareholder meetings like Buffett. I think that's so cool. But we'll save that for the future. Let's see here. Global commodities. High valuations have been a media explanation for tech selling. They do not support that data. In fact, 5 stocks within the Mag 7 are trading a materially lower forward Ps. I actually agree with this. For example, I think Meta is dirt cheap. Investment joy rent is decreasing in 20 years. Yeah, and that's actually supportive for lower rates. A lot of markets that had good building. But let me check DR Horton statement. The statement or the earnings call? I'll look. Let me go to, where's Meta? Bro, Meta's at a 1.25 peg. 1.25 peg. It's so cheap. Okay, what's the DR Horton statement? DR Horton Investor Relations. Let's see what we got. News, presses. You said statement, but I don't know if you're talking about the earnings report or what. But what are they complaining about? Let's see. Consolidated results, cash provided. Okay, first-time home buyers continue to respond to market conditions with discipline leading to a 5% increase in sales. Kevin going on a long vacation is a red flag. Thank you, Max. Canadian Thanksgiving is superior. I wouldn't mind having a Thanksgiving in Canada, but thank you, Max. I don't know. Somebody says, I don't have 20K to dump into Housecack. I can only risk 5K. I lost you at risk. Okay, I shouldn't say that. Dear SEC, there is risk with every investment. Okay, so liquidity, low leverage. What's the statement? What's the problem here? I don't understand. Low leverage, strong liquidity, cautious consumer sentiment. I mean, you could say that sentiment is a problem, right? Okay. I mean, we could do that. Let's go here, and we could say consumer sentiment, right? Where's my list? Where's my clickbait list? I need a list to choose from. Consumer sentiment. It's actually kind of interesting if you think about it. Lower Mag 7 PEs. Oh, somebody sent me a text. You know that number that I put up the other day where you could text me? What is that number? It's this button right here. Somebody sent me a text on this, and they're like, happy Thanksgiving to you and the Mag 7 children, magnificent 7 children here, because I have 7 kids. And they're like, oh, that's really cute. I never thought about it that way. That was nice. I quite enjoyed that. All right. So valuations, I agree with this. They will continue to trade idiosyncratically, but that creates opportunities, which means the cohort's influence may be waning. But that's bad because, those are the big cash cows. If stock market influence moves from Mag 7, it's a risk because other companies are less stable, right? Sorry, it's going to put up the little corruption thing when I do this, and because I haven't fixed this yet.
No, corruption is not bad. Corruption is only bad if I'm not involved.
Yeah, I gotta fix that. Sorry. I have the loop button on for those. I'll have to fix it, but I'm not gonna do it right now. I'm too lazy to fix it. Dude, there's so much crap to fix, man. I fix a little bit every day. This is why I buy fixer-uppers. I like fixing things. And I get sad if there's nothing for me to fix. I like fixing things. Projected data center power demand growing rapidly, but developers find constraints in power gas. Fine. Limited by power. Global macro allocation. Previous poor starts often still deliver decent returns. Okay, that's good. We derive market implied valuation. Let's see here. SoftBank share by stripping out all the publicly. We derive market implied valuation of SoftBank share in OpenAI by stripping out all the publicly held investments. Okay. Santa rally has not been kind to investors. AI news flow turning more bearish and Fed turning less bullish. Poor starts for the Santa rally for years in which the S&P 500 has been strong until the end of October suggests Santa rally can still happen, but needs dovish Fed in the December meeting. They will not be dovish. Let me be clear about that. Like, it is highly, highly unlikely that the Fed is going to cut and be dovish. Like, they'll hawk, but they'll be hawkish. It'll be a hawkish, slice. Appreciation cycle. The depreciation cycle, I think, is post-recession. I don't think it's a red flag of recession. Depreciation cycle is post-recession. Bury cycle is post-recession, IMO. It's my opinion. I'm not always right. So... Oh, all right. The city piece was interesting. I like the city piece. Let's save that puppy. Oh, yeah. Oh, don't you know? All right. What else? Let's look for some more institutional pieces. Okay. Also, Meng Fan. Definitely am saying that wrong. Meng Fan, thanks for joining Reinvest AI just moments ago. Appreciate you. Okay. So many people are joining Reinvest AI. We're looking at the house hack numbers and we're like, oh my Lord. This is a game changer. It's really exciting. This is some really big inflows. So, Ukraine's catch-22 moment, polarizing power. Okay, let's look at more institutional pieces because there's really nothing over here. What the hell is that? Former Intel chief. All right, whatever. All right, let me go see what else we got. So, that was Citigroup. That was interesting. What's Goldman got for us? Goldman Sachs. Goldman Sachs. All funds, Goldman Sachs, utilities, insurance, Ferrari Group, organic momentum is improving. That's cute. Pony AI. Oh, I'll take a look at Pony AI. Xpeng. Oh, they even have a piece on Xpeng. And then... buyers emerge into month end. Digital assets need to know. Okay, what is this? And then what is this? A factor shock? What's the factor shock? Go find out. All right, this one's called a factor shot. November might end up delivering unchanged for the S&P 500. What a ride. Real story hasn't changed. We had a spike in factor volatility under the surface. Takeaway, portfolios with strong bets, whether it's growth momentum, everything else. I've seen bigger swings. Okay. Crowding was most obvious. Breath has finally started to heal. Yeah, we've noticed this as well. This is something we've been talking about. And that should lower the greed and fear. Vol panic, systematic flows, cleaner direction. Let's see here. AI is finally showing up in earnings. Is it really though? Cost reduction and margin lift. That's the idea behind the Goldman Sachs basket of using AI, not owning AI. Or not selling AI. Okay, using AI. GSX U Prod. GSX U Prod. Let's see what that is. GSX U Prod. GSX U Prod. Let's see here. Oh my gosh, F off with the ad. I've clicked away like 5 screens now already. AI invest. My gosh. All right, where's GSXU prod? Okay. They're not going to tell us what's in it. I'd like to see specifically what's... Oh, here we go. Are these in the U prod? Berkshire, Walmart, United Health. Possibly. All right, whatever. Let's keep looking here. So, stepping back, skew towards U.S., factor shakeout, reset in the Mag 7. All right, let me see here. Biggest recession indicator is when my real estate buddies start holding poker calls. Last time was spring of 22 and the fall of 2008. Oh no. No. All right, let's see here. GSXU prod. Maybe I can find it here. Nothing. All right, whatever. Goldman Sachs. All right. Buyers emerging. Let's take a look at this. So buyers emerging. Following a sustained period of de-risking concentrated in emerging markets, the last 2 weeks have seen a flow more positive onto our desk. This is like international, huh? Okay, these are just flows. More international flows. Okay, that's fine. Boring. And then we've got ING, Jeffries, MAGA Schism, and Tether's diversification. Oh, there's going to be an article on... Okay, that could be interesting, because there's a Jeffries piece that'll potentially talk about gold and Tether. That'll make Steve happy. Nothing like the crypto bros buying gold to make the gold people very, very happy. Okay. Then we've got... Paradox of quantum narrative. Okay. Hiring and... How can hiring and unemployment rate rise at the same time? Ooh, that'll be interesting. AI momentum meets reality. Ooh. Okay. Important moment for Germany. Let's see here. AI moment meets reality. We'll look at that. Well, there's gonna be some juice here. And then we've got RBC Capital and Rabobank. Nerve-wracking. What are we racking? Oh, that has to do with the French government. Okay, that's fine. All right, how are we doing on the sticks? CoreWeave's bleeding. And the Qs are holding 617. Let's go. Let's go.
Bullish catalyst.
That's great. That's fantastic. All right. So now, let's get into the piece. All right. So NVIDIA's latest results reaffirm our view that the AI narrative remains fundamentally driven. Data center business continues to dominate. Market reactions have been muted as investors assess current valuations. Okay. Concerns over overstretched multiples have become indiscriminate. Right. Because the PE ratios are very low for some of these. NVIDIA's PE is 28% below Walmart's. I agree with this. Like, I feel the same way about Meta, too. Looking ahead, markets will require greater selectivity. But investors should avoid letting risk overshadow the structural opportunity. AI, blockchain, metaverse remain interconnected themes. Okay. What is this? How can new hiring and the unemployment rate rise at the same time? Well, it did. Somebody says, who believes those ADP numbers? Do you not? I don't know. I mean, they can be volatile, so maybe that's what you're referring to. All right. Silver hit record high. Saw that. All right. Fed markets finally got a jobs report, unless it was for the month of September. Both job creation and the unemployment rate raise. How? Well, it's because of participation, bro. You need to understand the two surveys. In terms of post-shutdown data, the full employment report, blah, 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 blah. Recent Fed speak is a divided Fed. That's it? Dude, that's a dumb piece. Delete. Stupid. All right, what does Jeffries have? Black unemployment, that's true. That's true. Black unemployment does tend to lead. Who knows if there's still structural racism left. Black unemployment, St. Louis, Fred. Let's go find out how that chart's been. Yeah, whoa. Holy smokes, dude. Wait. Dude, yeah, I mean, so here's 2000. Wait, let's put this on top of the unemployment rate. Wait a sec. This would be interesting. Let's add the unemployment rate of just everyone, right? So unemployment rate, add data series. Okay, here we go. Let's see if there actually is a lead. And then let's smooth this to quarterly. Okay. All right, here we go. So if I look at the 80s, I don't know, that seems pretty similar though, doesn't it? That seems pretty similar. What about 2008? Black unemployment rate, kind of ramping similarly, no? It just might be a little bit more, I mean, they definitely align. It's hard to say that one leads the other. I mean, that's happening right now. So, but there's that, but we don't, that is interesting. What about over here? Well, that was COVID. Let me go to 2008. 2008, let me go to monthly. I have to go down. No, it doesn't make much of a difference. Oh, wait, that was... Oh, I only changed line 1. Oh, I gotta change this one too. Oh. Okay. There we go. Yeah. Okay, now both are quarterly. It's hard to say that it leads. They seem very aligned, honestly. But you could argue that they're just, you know, in the span of a quarter, there's some catching up to do. But that is a crazy little spike right there, right? So, like, if I do this, and then we take a screenie of this, that's going to look like... Okay, arrow. Oh my gosh, who would do a yellow line? Must have been on black. Okay, so that is obviously an issue. Because it basically, it's almost like you could say they should be aligning. Like, I'm not going to say it leads, but I'm going to say they should be in alignment. And we don't have the data yet. You know, some of the data is missing to show the alignment over here. But that is interesting. All right. You know. All right. This was rob a bank on the French government. Okay, that's that. Let me throw that onto the e-hack. Okay. Recession indicators. Slap in that chart, and then silver record high, silver record high, and then of course the black unemployment spike. Okay, All right. So now, greed and fear. Used to think that midterms not so important because he can't run again for presidency, but it's become evident that an assumption is wrong for greed and fear. Republicans continuing to control is an important priority for Trump. Okay, we know. That's why they want to buy it with stimulus checks. Yo, if you give us midterms, we'll give you the stimulus checks. Average effective tariff rate, 16.8%. Still the highest since the Great Depression. There have been signs of late that Trump is becoming less confident the Supreme Court will rule in his favor. Could lead to a huge refund bill, but that would be great, dude. That would be great for the economy. He has proposed giving every American a dividend check. Politically exposed. $450 billion is what Yale Budget Lab thinks. Okay. Market closes in 44 minutes. Greed and fear. Hong Kong property prices have bottomed in Hong Kong. Well, and you just burned down a bunch of apartments. Similar uptick in youth employment? Yeah, exactly. Okie dokie. Then we just get into the other markets. All right, fine. All right. What else? Thoughts on the month end. We talked about that. Let's look at the sticks again. Oh, why is Chipotle dying? Chipotle is rotating a little down intraday. Bitcoin keeps going down. And it looks like we're going back to 617 on the... we're still above. Volatility down and the Q's down. It's a very chill day, honestly. Huh. I wonder if people are going to exit this now that we're in the last hour. Sometimes the last hour, you see the meme players just get dumped. More coffee. More coffee. More coffee. Sorry, I should stop yelling. I'm not supposed to be a yeller or screamer. Did I mention we have a Black Friday sale going on at meetkevin.com for the membership? I don't know. I feel like people only realize that HouseHack has a Black Friday sale going on for the AI membership. Maybe I'm not being clear. Whole new course coming out? Oh, just kidding. Aaron just joined the Meet Kevin membership, so you are aware. Welcome. Salvatore just joined Reinvest AI. Salvatore joins Reinvest the AI 1 minute ago. Welcome aboard. Thank you so much for joining. Aaron joins the Meet Kevin membership. Welcome aboard. All right. Thanks for joining. Okay, so let's see what the Doomsvilles have. So, you know what we should do is let's go to look at if there are any good Bloomberg segments. Bloomberg. Okay, you got Salvatore. We got Salvatore. We are going to the moon together. Okay, let's see what the Doomers have. Fed decision. Yes, it will matter. Trump demands reverse migration. Bro. India's already seeing the impact of higher tariffs. Duh. Okay, let's try Fox Business. Okay. Videos. Economist says eliminating income tax is not feasible unless this is done. What? Balance the budget? Tariffs could spark holiday sticker shock. CEO torches K-shaped recovery. Okay, let's look at some of these.
On this program, John Lonsky is an economist. He said we always get it wrong on consumer spending. He says we always underestimate it. Well, let's bring in Gerald Storch. He's our retail specialist. Gerald, what is your estimation of the holiday season and consumer spending? Is it going to be really, really strong?
Yes, it's going to be really, really, really strong. I've been saying this for some time. Every indicator is that the consumer is out there spending through all the talk about tariffs or about, affordability crisis.
Bro, if they don't spend, we're screwed.
Sales have held up all year, and they continue to be strong. And all the data that you can see now, we don't have government data for this month or recent times, but we have credit card data, other data. It all shows big increases, like 5% or even 6% gains year over year. It's impossible to give you a precise point estimate, but I'd say at least a 5% year over year gain in retail sales during the holiday period. It could be more.
That's wrong. Now, are you in a position to say whether Black Friday or Cyber Monday offer the better deals? Can you make a comparison, or is it apples and oranges?
It used to be more different, where Cyber Monday was heavily focused on tech purchases, but everybody's competing every day. I think the hardest thing for retailers now is to distinguish what they're offering on Black Friday, what they're offering on Cyber Monday. Sometimes they're offering basically the same thing. It's all a great period. It's merged into one big holiday, kind of a cyber week that starts, frankly, Thanksgiving Day is a huge day online and extends all the way to Cyber Monday, and everything's on sale all the time. Look for the deal you want. It doesn't matter which day you buy it.
I'm sure you saw this, but Urban Outfitters, they made the most money ever this quarter, and the stock is up 11%. Do you know what is it that they're doing right?
Well, it's not just them. It's part of what we're saying about the consumer being fundamentally strong. These companies that are sort of apparel specialty players, when they get it right, they get it right big. Look what happened to the Gap. They have a new CEO there the last few years. He's been doing a fabulous job. Their numbers are great, and they were way up, way up. Abercrombie & Fitch was up huge when they were...
Okay, this guy is such a shill for Black Friday. I'm basically writing down that if we miss, people like this are going to lead to a big sell-off into the market.
Countdown to Black Friday is on, and
still under debate. Both Price Waterhouse and Deloitte surveys of consumers showing Americans tightening their purse strings with declines of anywhere from 5 to 10%. Gen Z.
Interesting though. So Deloitte and PwC actually see a decline. But the National Retail Foundation is bullish. So you have this mixed data, though. Okay, that's interesting.
It's cautious, saying they plan to spend 23% less than last year. But the National Retail Federation sees sales rising. They plan to spend their purse strings with declines of anywhere from 5 to 10%. Gen Z, the most cautious, saying they plan to spend 23% less than last year.
In a survey.
But the National Retail Federation sees sales rising 2.9 to 3.4%, breaking through the 1 trillion mark for the first time ever. Now, meanwhile, the big discounters like Walmart, TJ Maxx showing strong early results. But what can consumers expect as they hit the malls and fire up their web browsers this holiday season? One retail consultant says potential price hikes loom with the elimination of the de minimis tariff, which allowed goods under $1,000 from offshore to enter the U.S. duty-free. She says it could cause sticker shock for some consumers. Listen.
You need to buy now because we don't know what's going to happen. Tariffs could go up at any point, in which case those prices will get passed on. The price increase will immediately get passed on to the consumer.
Now, travel snafus could also make it difficult to get your presents delivered on time, so Herzog is also recommending shipping presents early, by December 17th at the least. Plus, the best prices, that is, on big-ticket electronics will be available after the holiday season, January 5th and later. Bottom line, if you want to save money this holiday season, make a list, stick to it, and start early.
The lists in my household, Jerry, are very, very long. I don't think I'm going to stick to them. I would go bankrupt. Thank you for that report. Appreciate it. So, Jack, you brought up this whole spending thing in the first block. Okay, so consumers say, we're going to spend a little bit less. The stores say, no, they're not. They're going to spend more. What do you think is going to happen?
I think the National Retail Federation has an interest in saying that the sales are going to be very strong. So I'm looking at those other two surveys and saying spending could potentially be down. I'm wondering how much it will be. We'll see.
All right. We'll see. Let's go to the next
EJ
one.
Antoni joins me now. EJ, happy Black Friday. I mean, is Black Friday still important? I mean, we've seen these holiday promotions going on for weeks. I've already started wrapping my Christmas.
Ooh, look at the repo market, by the way. The repo market topping off again. That's going to have to get added to our catalyst.
Still important. They're just not nearly as important as they used to be. I know it's anecdotal, but I was out with my father this morning helping him grab a tree, and the parking lots just looked like any other weekday. There really wasn't anything special there in terms of volume. However, all we're doing is simply, I think, transferring that volume to other days in November or other days in December. So I would expect you're still going to see the overall same volume of holiday sales there.
The White House says it might slash income tax completely over the next few years because of the revenue that is being generated from the tariffs. Do you think eliminating the income tax altogether makes sense?
Well, sure, if you're going to have absolutely massive cuts to government spending, which I would love, don't get me wrong, but it's just not feasible, again, unless you're going to have much higher tariffs and much, much less government spending. It is.
Yeah, government spending less money. Good luck. Good luck. All right, what else? Boy. Let's see what else there is, and we'll summarize this. Kalshi, market maker, bets against consumers, lawsuit alleges. Okay. Teen retailers draw more Black Friday shoppers than mall stewards. Top Zelensky aide out. Saw that. Wall Street Journal, what do they have for us? Deliver or die. No alarm. CME outage. Fresh scandal. Mom top. And a top Goldman job. Okay. Alright. Officials have been warned for over a year about the fire, flammable foam panels, and scaffolding, but the government did not take action. Well, that's wild. For more than a year, residents alerted officials about potential fire safety violations. Wow, that's sad. Netting that covered bamboo scaffolding and styrofoam panels. Netting may be flammable. Foam boards were highly flammable. Wow. Wow, wow, wow. That's insane. All right. Zelensky. Saw this. CME outage. War-linked asset rally. JP Morgan Diamond approves London Tower after UK assurances. Why I couldn't help torching my equity funds. Okay, we'll see what's going on over here. We've got a massacred for a smaller investment call. I apologize. Here, rules are clear. So, luckily for markets haven't crashed. What is this? Record high. Blah blah blah. Okay, this is just somebody talking about trading. Okay, whatever. Don't care. Economist. We saw this about the robo-taxis. Britain will tax electric cars more heavily. Consumers are miserable, but they keep spending. Firms face a margin squeeze. Oh, now that's interesting. Let's take a look at this. So, for profits to keep growing, they must elbow their way out. Okay, what are they saying? Deutsche Bank expects profit to accelerate. Morgan Stanley agrees. Half of the extra profits will come from technology and media companies. Over the past 12 months, sales grew by at 865 American companies. Yet at 394, costs of goods sold rose faster, squeezing margins. Firing staff, companies can look for ways to be more productive, whether it's through AI or whatever. Firing staff would be the problem. In order to juice margins, they may be attempted to cut back on R&D. Nearly half of the firms in the S&P 500 are reducing their capital expense. Shows up via lower depreciation expense. Right. Yeah, profit, cost may be illusory. Why is this not highlighting? There we go, nearly half. There we go. Data margins are not always a problem for the bottom line. This is the case for NVIDIA. Okay, for the S&P 500, blah, 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 blah. Hacking away at growth. Margin cull. may well ease. American economy may eventually slow if CEOs put off their margin question until then. No longer be okay, whatever. All right, that's kind of boring. We got here trilateral leadership over here. Is that what I clicked on? No, I meant to click on this. There we go. American consumers are miserable, but keep spending. Okay. Census Bureau released figures showing that spending at retailers and restaurants was up only by 1% year on year. Retailers and restaurants. Those were the retail sales numbers. It's pretty low. Actions speak louder than words. Businesses are struggling to gauge the mismatch between gloominess and how long the resilience can continue. Right. How long can this keep going? Reasons to remain optimistic. Poor Americans have been increasing their overall spending, even if at a slower pace. Well, we'll see if it keeps going. This is a cool shot. Yeah, I guess it's supposed to be pretty cold in New York right now. What's the weather? NYC weather. NYC is 41 degrees right now. Wow, 41 degrees. Okay, Qs are at 617. And let's see here. Restoration hardware keeps bleeding. Qs are holding on to 617. Bitcoin's trying to lose 90. I'm not exactly sure why. But it is. Keep getting the bleed on Nvidia and the profit take. Meta keeps its reversal up. Bought the dip on Meta. Keep in mind, if you join the Meet Kevin membership, you also get my buy sell alerts. So when I sell a stock or I buy a stock, it's like built into our portfolio. You know, when there's an alert to send, I send you an alert and you get that notification, which I think is kind of cool. Kind of see what's going on. Affirm's doing quite well too. You know, the holiday season, this will be pretty good for Affirm. Nice uptrend, frankly, on Affirm for a while here since 2022. Okay. And let's see, Qs. Okay. Continue on here. The information, what is this? The information's gift guide. Don't care. Pakistan. What gifts are you going to buy for me for Christmas? You gotta send me gifts. No, you don't have to send me gifts. Go invest the money in your own education. Invest in yourself. Gold, 42.42. Black Friday blowout. A historic New York City clock tower is selling for $19 million. Oh, house hack should buy it. What can we do with it? Triplex apartment. Oh, it's just one apartment? Oh, it's a penthouse. Oh. That's kind of cool, though. Is that true? Rebecca. So I want to see the unit that's for sale. Yeah, there it is. 19 mil. Look at this. Oh, this is sick. Oh, it's under contract. Somebody bought it. I ain't a wedge deal anyway. Wow. 8,000 square feet, man. That's gorgeous. I wonder what its location is, because I don't know where this street is, but I'm going to look. Gorgeous building, man. Holy smokes. Oh, the kids' room. That's cute. Very cute. Wow. Wow. That's very nice. All right, let's look this up. So it's here. Where is this? Is this just to the east of Central Park? Nope. Not even close. See, I don't know where this is. Okay, now I know. This is close to the financial district. This is really close to Wall Street. This is just east of the Twin Towers, now One World Trade Center. And I think it's just above the financial district then, eh? So here's City Hall. There's the One World Trade Center. So here's Wall Street. Okay, so you're halfway almost, a little more than halfway from Central Park to the financial district. That's cool. It's over here. I wonder if I've been here. Let's just take a peek. I'm sure I've walked by here. All these little parks. Lafayette. Oh, that's cool. All right. Anyway, so where were we? Very cool. So, Axios. Wait, what? Look at this headline. Social media users flee X and flock to TikTok and Reddit. Would I interview Mom Dominic? Why does he need to do interviews at this point? Poor guy won. He's got work to do now. Now he's a politician. Okay, share of adults who say they use select social media platforms. Oh, wow. Yeah, Twitter has fallen. I mean, Reddit's surging, WhatsApp surging, TikTok surging, Instagram surging, YouTube up, Facebook up. The only one that's down is X. I mean, it is a cesspool, but it's, it's my kind of cesspool. But wow, that's bullish Google and Meta, right? YouTube is king. I agree. YouTube remains the most widely used platform. Wow, that's hot. Have I talked about my Black Friday sale at Meet Kevin yet? That's interesting, actually, though. That is interesting. All right, very cool. What kind of water softener system do you end up buy for rentals? Usually we don't. And then if a property needs it, or a tenant asks for it, we'll install it, and the tenant will pay monthly for it, right? And then that guarantees that it actually gets serviced. Some hard water areas you have to, and I mean, you could just pick up a system at Lowe's and have a plumber install it, Guard member who joined right out of high school. Oh, that's sad. "10 deal traps to avoid. Retailers fool you." Blah, blah, blah. All right. 10-2 spread stable. Asmon gold. People are effing stupid. Okay. Old news. What's Ben Shapiro up to? National Guard. What's actually happening in Hollywood? My beliefs got challenged by Jordan B. Peterson. Oh, no. Valuetainment. Unvetted Afghans. Trump roast reporter. College grads fail to find job. All right. Nothing fun there. We went through this. Nothing fun here. CNN. Zelensky. Man. All right. What's this? Does Sarah Eisen have anything for us today? Find out. Nope. Okay, what about Taylor Riggs? Maybe Taylor Riggs has something. Growing bubble risk could pressure credit, says Fitch. Hold on, here's Taylor Riggs.
But AI happened so fast. Technology is a hockey stick.
Okay, stop talking. Let Taylor talk.
The fourth iteration of ChatGPT in 2022, and nothing has been the same since. Just think about how quickly it has changed everything. And I cover AI. When you talk to businesses, they're waiting and seeing. They're freeing up as much revenue as possible, as much of their spending dollars as possible, to spend on AI. Kids that are coming out of college, I'm talking to so many college juniors and seniors that are struggling to find internships because companies don't know what they're going to be doing with these entry-level jobs because it's being replaced by AI. I even heard here at our company, when you're interviewing for an internship, you are doing an interview with a video AI person, not a recruiter at Fox, because why not free that up? So AI is coming. I do believe it happens with every industrial revolution that there will be new jobs. But this is truly the biggest change we've seen in our lifetimes. So it's not going to be a one-for-one switch. And I think it might take a little longer to reconfigure what the workforce looks like. And the person who loses their job entry level is not going to become, I don't think it's going to be like truck drivers didn't get jobs in big major companies. This transition takes longer. I do think those kids that are struggling to get internships are well positioned because they know the most about technology. So that's hopeful for them. But I do think there's a lot of the workforce that eventually will be in that 1 million group of jobs cut, and where they get their next job and how quickly they do.
How do you interview with a bot? Because there is evaluation there. I just can't understand that. I've used a chat bot that's run by AI. I don't know, at Target, for example.
It's run by AI.
Damage. So they look for keywords in the chat and then they give you options of what you can do. That I understand. How do you evaluate a candidate for a job?
I look for keywords, how they present themselves, and I'm sure there's body reading AI that says like, okay, how are they presenting? And then it's recorded as well. So if a person wants to review it, but I think that's a great question.
It might turn out that interviews are not a good purpose for AI. I mean, the economy really is in kind of an experimentation phase right now. All I know is that, look, we used to have an entire cadre of people whose employment was elevator operators. That's what they did a lot, where they stood at the elevator, took it to the 5th level, took it to the 8th level. Well, thankfully, that was replaced by computers, replaced by technology. We're going to see more and more of that. Also, there's more opportunities now to get retrained than there ever before. You can take Harvard classes or MIT classes, whatever, sitting at YouTube. So I think if people are now, they're going to heed some of these AI technologists' warnings and get retrained on what will be the new jobs of the future.
There's almost no excuse, because this gives me everything I need to know about a new job or a new trade school or a new something or a new opportunity to learn, and it's free.
Right.
So there's no
AI does
excuse
that.
for me
You can
not
learn
to learn when I have this at my fingertips.
Laziness.
The older you get, the little harder it is to shift gears. As you get older, it's hard to shift gears like that.
The criticism has been AI's changing it so quickly that there isn't time, because literally, like in 2 years, AI went from nothing to almost.
When I've got so much of my tax dollars going to educational institutions that actually aren't doing a good job of preparing anybody for this world, that bothers me. Give me back some of that money. I'll use it to pay for the training I need to do. There's a whole lot that has to happen in that world.
Here's what does not bother Jonathan Hoenig. Silver at a record. Yep. The last record I had was 55. So if we're at 56, 57 an ounce, we're getting there. You tell me, Fed interest rate cuts, supply tightness. I've had inventories at warehouses or at record lows going back to 2015.
Price.
Tariffs on silver. What do you think?
And price itself. Price itself is a great indicator. And it's not just been silver. We've been talking about gold at all-time highs for months. You're also seeing platinum and palladium take off. So, I'm following this under the heading of a rising tide lifts all boats, which is why, we've talked about being diversified really means not just owning 2 or 3 different types.
Man, back to 617. Back to 617. All right. Let's break some of this down, because we've gone absolutely nowhere today in stonks. Absolutely nowhere. Let's break down what's going on. All right. Get that away. Cool. And let's go here. And let me go look at this really quickly. And then let's do this. All right. Let's see what we got. So, shout out Vic, who just joined Reinvest AI. Keith, who just joined the Meet Kevin membership. What's up? Welcome. Just got those alerts, so those of you joining, welcome aboard. All right, Black Friday sale cooking. All right, let's get going. All right. Well, as usual, when the Federal Reserve's repo facility starts popping off, people get nervous about recession fears again. So you can see on the right side of this chart, we've got the repo facility popping off again towards month end here. It's the same thing that we saw in October with the highest spike in repos since COVID over here on October 31st. And the reason this is concerning is because this facility never gets tapped for utility in normal functioning markets. And so at the same time as you've got the repo market popping off again, suggesting liquidity stress, you have people coming in saying that, hey, the setup that we have of people throwing 401k retirement money into private equity is going to lead to a massive disaster, a financial crisis that taxpayers are going to have to bail out. So what I thought we'd do is, why not reconcile all of the risks that we face for recession right now so we can keep an eye on them and we know what data to watch. Now, you know that you could go to meetkevin.com/data and you can see my bull bear scale. My bull bear scale right now is pointedly in the middle. We're on the teeter-totter because of the issues that we face. Now, that doesn't mean I'm not buying. In fact, we were just buying the dip during the crisis that we recently saw. And of course, you could get all those trade alerts and the new reinvest course at meetkevin.com. Black Friday sales live now. But more on that later. Let's instead focus on some of these recessionary catalysts that we face. And so what we looked at is we looked at the Citi Research macro think tank piece. And they had some interesting arguments here. First, they suggest that AI investments right now still have more room to grow, and that hopefully we could start seeing some of these productivity gains materialize next year. And that's what we're looking for, is a materialization of artificial intelligence spend, because we know spend has been pretty wild on it. In fact, it's been one of the reasons why I think Bank of America is arguing we're seeing some diversifying from tech. In fact, tech indicating some of the weakest inflows, in fact, rather net outflows. More big tech outflows now at, quote, multi-year extremes, with tech seeing the biggest outflows for the sixth week, and these tech flows at now record lows. Now the lowest level of tech flows since June of 2021. So what's going on here? My assumption, some form of profit taking going on in tech. And I think it's one of the reasons why we're seeing valuations for some of those Mag 7 names pretty dang low right now. I personally look at stocks like, for example, Meta, and I'm like, my goodness, like some of these valuations are really low. Meta's trading for a 1.25 peg. It's remarkably low right now. And you see other institutions are starting to talk about this as well, suggesting, hey, like this seems odd. Why all of a sudden are we seeing some of these individual names sell so cheaply? Here, for example, you have Franklin and Templeton making the argument that NVIDIA smashed earnings, yet NVIDIA is selling for a lower PE ratio than Walmart is. And Franklin and Templeton is essentially making the argument that there's this odd, indiscriminate selling happening in tech right now. And it's unclear, is this happening because of people's fears regarding a potential recession? Or is this just what I call smart diversifying? I think that people might have become very overweight in technology. And so what you're seeing here, according to Bank of America, is single stock outflows, but large ETF inflows. So you're seeing money go into ETFs, 3.2 billion in the fourth week of outflows at 3.2 billion for single stocks, but ETFs saw inflows, sixth week of inflows, $4.8 billion. In my opinion, suggesting people are building up resilience in their portfolio, diversifying away from some of those single stock names and getting baskets. It's somewhat kind of like I had this 1,600% return on my NVIDIA position, multi-million-dollar NVIDIA position, which is great. But over the last few weeks, I've been selling my NVIDIA position. I send out alerts every time I sell it. I think my average sell was probably somewhere around 192 on NVIDIA. I sold some over 200, some under 200, right, plus or minus. And NVIDIA keeps selling down right now, which is unfortunate because its valuation is actually low as long as growth continues. Right, as long as the PEG ratio for NVIDIA goes, it's a $300 stock if that growth ratio continues. But people are profit taking. They're also profit taking on Google. They're diversifying away into other baskets. And so we have a basket, for example, of 10 stocks to buy for the next 10 years. We talk about in the Alpha Report all the time. We just added our 8th, and I've got 9 and 10 coming up likely before the end of the year. But anyway, I'm really going from like that one stock concentration to 10. And I think that's kind of what you're seeing here in the Bank of America data as well, if I had to try to put an explanation on this. I think people are saying, look, I've made good money on some of these plays. Yes, stocks can keep going up, but I'm going to diversify. Now, so far, you're seeing private clients, so essentially retail at Bank of America, leading institutions in dip buying. So that is continuing. However, you're seeing some more institutional buying. But the problem that you're getting right now is corporate buybacks are slowing down. Now, that's one of the potential red flags for a recession. Now, we don't, only want to hang our hats on a recession thesis. I'm 50-50, right? I plan for both scenarios. Oh my gosh, it's Taylor Riggs. Oh, I missed it. They had this close-up of Taylor Riggs on Fox. I'm sorry. I got distracted there for a second. But anyway, leading into a recession, you have non-financial corporate buybacks. I want you to look at this. Corporate buybacks peaked out in about 1999. So about 1 year before the stock market bottomed and topped, and about 2 years before recession. That happened again in 2006. Corporate buybacks peaked in 2006, about 1 year before the stock market topped, and about 2 years before the 2008 recession. Now, this is going back to 2001 dot-com bubble and 2008. But what's really interesting is Bank of America is talking about this. Look at this. Bank of America says corporate client buybacks accelerated for a third week to an 8-week high, but the trailing 52-week of buybacks as a percentage of market cap has been declining since March to their lowest level since March of 2024, which is not great. A potential weakness into 2026 would be weakness in corporate buybacks. So that'll be something else that we pay attention to. Now, if we go back to the Citi piece over here, we wrote down some red flags for recession, okay? So, they do talk about Fed Williams popping up the odds of a Fed rate cut. Remember, we predicted that. On ADP Jobs Day, we said, listen, we got a 43% chance of the Fed cutting rates in December. All you need right now is the Fed to come out before the Fed's blackout window starts. Today is when the Fed's blackout window starts on Black Friday. So they'll be silent until the Fed meeting December 10th. And all you need is the Fed to talk it up. Williams talked it up. We're at an 83% chance of a cut right now, so we're pretty much going to get it. So what are the red flags? Okay, so the red flags of recession, we've got them enumerated. Well, they're not enumerated here, but we've got them listed here. Red flags of recession. We know layoffs rising are a red flag, but the participation rate rising for the labor market is also an issue, and Citi is paying attention to it as well. So outside of layoffs, I rate this is probably the second big red flag. Labor force participation can rise when the K-shaped economy keeps suffering. So if we get weak Black Friday sales data, we'll see. I mean, so far we're kicking. Thank you, by the way. I think a lot of people are investing in Reinvest AI, the lifetime membership, or the lifetime membership for the Meet Kevin membership, all the trade alerts, 9 course and everything. They're taking advantage of the Black Friday sale. But I think that's different from consumers. Consumers are getting, screwed via high prices and the K-shaped recovery. But I think people are still willing to invest in their education and their future. But if we miss on Black Friday sales, like the economy broadly, then people like this guy who are shilling that you're going to have this massive beat are going to look like clowns, but it's probably also going to be bad for stonks. Like, listen to this guy, how confident he is.
Affordability crisis, whatever jobs, whatever people are talking. Retail sales have held up all year, and they continue to be strong. And all the data that you can see now, we don't have government data for this month or recent times, but we have credit card data, other data. It all shows big increases, like 5% or even 6% gains year over year. It's impossible to give you a precise point estimate, but I'd say at least a 5% year over year gain in retail sales during the holiday period. It could be more.
At least the 5% could be more. Now, that doesn't jive with all estimates, mind you. Estimates are a little all over the place on this. National Retail Foundation is forecasting 3.7 to 4.2% rise. You've got PwC and Deloitte, though, the accounting firm, seeing a potential 5 to 10% decline. If we get a 5% or 10% decline in Black Friday sales, people are going to SH&IT bricks in the stock market. And remember, the stock market selling off can be a recession cause itself. So not good if we see a miss. That's why people are going to be paying attention to this. This could be a catalyst. Hopefully not. You know, Bloomberg saying shoppers are underwhelmed by deals and crowds on Black Friday. I mean, I have fond memories in like the early 2000s of going Black Friday shopping with my dad. I actually talked about it yesterday with my dad. Like, I told him I miss going to Black Friday sales with you, like at the mall. And he's like, "Oh, Kevin, I remember you waking me up at midnight." And then guess what he says next? You're going to love what he says next. Go to meetkevin.com and sign up for the course. No, he doesn't say that. No, he's like, "I remember you waking me up at midnight and dragging me to GameStop for the midnight sales." Dude, I wanted a job at GameStop so badly when I was a kid. GameStop, by the way, up 4%. Shout out to GameStop. Great balance sheet, by the way. Great balance sheet. I love what's going on at GameStop right now. And the sales lately have been good. And as long as Bitcoin holds up, we won't have to take too much of a negative on the quarterly earnings there due to Bitcoin write-downs.
Kevin is much more interested than most people, by the way, in the balance sheet.
Yeah, exactly. But we have to also look at some of these other issues. Labor force participation is starting to rise. Now, it could start rising because if Black Friday sales miss and people get laid off, older people and families might have to go back to work. Early retirees, there are 2.5 million excess early retirees. If they go back to work, or just more people have to participate, a single income household has to turn into a dual income household because it's harder to get a job. Participation rate goes up, the unemployment rate skyrockets. That's bad. So ironically, the participation rate rising is not only a sign of economic stress, but a big move up in the unemployment rate. And it just started moving up. So layoffs rising, unemployment rate goes up. Participation rate rising, unemployment rate goes up. The level of 27 weeks unemployed people, this is your long-term unemployed bunch of people, right? You could just Google it. St. Louis Fred, 27 weeks unemployed. You want to pay attention to that. It is a leading sort of harbinger of a recession. And if you just zoom in over here, 2001 skyrockets, 2008 skyrockets, COVID obviously. What's happening on the right? Bouncing up again. But it's not just the 27-week unemployed level. It's also black. Yes, the color of skin. Black unemployment rising is another harbinger. This is seen right here. And I don't know if it's as much of a leading indicator as it is a coincident indicator. But if you look at every recession, 82, 80, 90, 2001, 2008, COVID, black unemployment rising is a harbinger of the unemployment rate rising. They may happen at the same time, but as you can see right now, there's a bit of a disconnect with some of the missing data that we have. Black unemployment suddenly skyrocketing on the right. Some people are saying that, you know, this is just like, I'm gonna try to be as neutral and observant here as possible because some people are going, "Oh my God, that's racist." But some people are making the argument that black individuals may be more likely to be exposed to being replaced by artificial intelligence. I don't know if that's true. I've seen the argument, though. Is it possible? I don't know. But that's what some people are arguing. So maybe there's I don't know. It historically hasn't been true, but historically we haven't had AI, right? So I don't know. Then you also, of course, have this risk that the Federal Reserve exacerbates being too late because they look at still elevated core CPI levels because of inflation. Of course, you have the Japanese carry trade, the private credit disaster. But I'll tell you, you have to balance out this private credit concern with what happened with private credit and, what was that company called? We just had a $300 million a subprime mortgage money raise. And I was absolutely blown away by this, by the way. You had like a $200 or $399 million money raise for a subprime credit, Pagaya, the private credit issuer, Pagaya. $399 million subprime debt deal, and they actually raised it. Now, they had to increase the yield to justify it, but still, man, what the hell? How is private credit and subprime auto in this environment still raising $399 million? kind of not very recessionary if you ask me. This is why the data's kind of like, I don't know, man. Like, I don't know, keep buying the dips, been winning. You know, every dip so far that's been bought this year has been a winner. You know what else is a winner is Reinvest AI. A ton of you signing up for this, by the way. I'd say probably at like a, you know, if I had to average it out, there are probably 3 people buying a Meet Kevin membership right now. So if you go to meetkevin.com, you get the Black Friday sale on the Meet Kevin membership, which gets the new course, by the way, that's coming out as well. That'll be great. And all of the other ones, mind you. Gets everything, which is cool. But there are probably 3 people buying this for every 7 of you buying the lifetime access to Reinvest AI. And of course, some of you are bundling it up as well. If you join like the Meet Kevin membership, you get the bundle coupon. But anyway, so yeah, this is really interesting. So, and of course, you have the Japanese carry trade, which is another risk factor. But that's more of an issue if we see a sudden reversal in some, you know, something going on with the USD to the yen, right? There was a little bit of, I think people are once bitten, twice shy. So I see it as less of an issue. I think people are more likely to front run and rebalance. I think that's why we're seeing some of the single stock selling, ETF buying, because people are minimizing their margin, they're paying off some debts. And it actually builds stability going into 2026, which is good. So all of this is so far very 50-50 on data. I also think this Burry depreciation cycle is overblown. I think the Burry depreciation cycle is a post-recession issue, not a leading recession issue. That's my opinion with the Burry cycle. Like, it will be an issue, but it'll happen in the future. We also, you know, they say here, Citigroup reiterates that 5 stocks within the Mag 7 are trading at materially lower PEs, not including Tesla, obviously, materially lower forward PEs relative to the start of the year. This means we've seen more growth and more earnings at these Mag 5, like Meta being part of them. And they're actually becoming cheaper on a valuation basis, while companies, you know, while all of a sudden people are worried and maybe diversifying away from them. I don't know. But the valuations are not high on those. Anyway, they say the Santa rally has not been kind to investors. What we really need to keep going, to be bullish towards the end of the year, is a bullish Fed. Bullish Fed. Somebody says, what is Reinvest AI? Just go look it up. Look up the housing disaster video, and you'll see it. So just go to YouTube really quick, type in Meet Kevin housing disaster, okay? Meet Kevin housing disaster. And if you type that in, watch, this one right here. I just really effed up housing disaster. If you watch this video where I got the little light on my head, that's the video you want to watch to learn about the Reinvest AI. It's House Hack's AI product. And we're doing a Black Friday sale on it. It launches in December. You lock in lifetime access. I think it's a killer deal. But if you watch that, you'll learn more about it. Okay, so anyway, so where was I? This idea about the Fed going dovish in December, bro, you got to be kidding me. They're not going to have data to be dovish on that. You know, it's ridiculous. So what you really have to, somebody says, did you watch CoffeeZilla's video on NVIDIA? I did, and I'm sure he watched my analysis on NVIDIA. But yeah, no, we reviewed this in the yesterday Thanksgiving video. Like, he didn't really tell us anything new. We knew that. It was just sort of a summary for the younger cohort. But anyway, no, what you got to pay attention here is the Fed is not going to be dovish in December. I think, Kevin prediction, okay, you're gonna, and this is why I say the bullishness could temporarily end. D9 bullish trend may end. Why? Because on D10 we're gonna get a hawkish cut. So it'll be bullish that we get the cut, but you're gonna get a hawkish cut, and that's gonna be bearish. Unfortunately, that's my take. So I don't think that Citi is gonna see a dovish Fed in the December meeting. There's no way. You'll get the cut, but no way. What else do we have here? We have Taylor Riggs. There's Taylor Riggs. Then over here, you have the story. What do we have here? We've got late October, the real factor shock here. This is Goldman Sachs. Basically, they're talking about decrowding. and breadth has finally started to heal, which is bullish. This means more stocks moving up versus down. You see this in the consumer names as well. Dave & Buster's has had one hell of a rally from the bottom. You're also seeing Circle come back, by the way. Circle has gone full circle, fully retraced, 100% retracement. Flows turning a little bit more positive. That's great. MAGA schism. Expect the stimulus checks, they think, so they can buy the house. That's fine. And then we saw the Franklin Templeton piece. But yeah, I mean, if you look at some of the sticks going into the close here, you got a little bit of a push there on the Qs. Take a look at this here. Look at that. That's nice. Wow, that's nice. Finally broke off 617. This has been our goal all day long, was getting 617 to break, and we finally launched. This is great because it's a sign of institutional flows into broader ETFs at the close of the day. That means holding 617 broadly bullish, good. I still maintain that we could get 627 by December 9th. So 627 by December 9th, but that's when the catalysts start getting a little harder. It means we don't necessarily go to a full retrace. It means we get the Qs that go back up to about 627, not all-time high 637, but then we get a hawkish Fed, and then it's going to become, we're going to be going back to the good old...
Data dependent.
And that's, of course, where we decide, are we going recessionary or not? So that's a bit of the data set for today. If we look at, The Economist, the economy talks about margin squeezes. That could lead to people getting fired. Big deal. We already know that. I mean, people losing their jobs suck, but it's old news. Axios has a piece saying that the only social media platform that's down since 2021 is X. So they're arguing that people are fleeing X. You've got a clock tower for sale that went under contract, which is kind of cool, in the Tribeca region of Manhattan for like $19 million, which is really awesome. It looks really cool. I'm totally jealous. American consumers are miserable, but they keep spending. We'll see on Black Friday data. And officials have been warning about the Hong Kong fire. We did see commentary about this as well, that the bamboo scaffolding as well as flammable foam panels along the side of the construction site were a long-term warning for these buildings, but apparently those warnings were not heeded at all. So this gives you an idea of what's going on. Now, there were also notes this morning about Zelensky, and Zelensky's basically VP quitting. Now, something to know about this is it's entirely possible, while silver hits all-time highs, right? So we'll talk about that in just a moment. What's interesting here is there are a lot of people that look at this with skepticism, and they say that how interesting that as soon as you get this guy starts bagging on a potential peace deal between Russia and the United States for Ukraine, which is basically being negotiated by the United States. As soon as this guy says, hey, we're not giving up, we're not giving in, all of a sudden he gets raided for corruption and then resigns. Is that really a surprise? That, on one hand, you're going to have people going, oh, Ukraine corrupt? Ha, 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 what a surprise. On the other hand, you're going to have people going, yep, people think Ukraine is corrupt, so therefore, the easiest way to get somebody to quit is to raid them for corruption, and then you force them out, and they're potentially a C block, so to speak, to getting your deal done. So people are going to assume they're guilty, because that's the meme these days, that's the momentum these days, is assume they're guilty. So you're going to get guilty until proven innocent. The fact that they resign is the expected outcome. That's the expectation. And maybe it makes it easier to get a deal in Ukraine. Kind of wild, a little cynical, but probably exactly what's going on. Silver hits an all-time high, and gold is, now being talked about as potentially the, Reuters got a big piece about Tether aligning the rally in gold with Tether going to buy gold. So nothing to get gold and, metals bugs really excited than hearing crypto bros are buying gold. So we'll see if that continues. And then the big thing to cap all of that off with is, of course, let's just shout out those of you who bought the memberships within the last hour here, okay? Let's look at like the last 60 minutes of those of you who bought. Motabik, thanks for joining the Meet Kevin membership. Oh, we got the bundle. Motabik bought the Meet Kevin membership and Reinvest AI. Vic joins Reinvest AI. Keith joins the Meet Kevin membership. Here's Salvatore. Salvatore joins the Reinvest AI. Aaron joins the Meet Kevin membership. Mengfen joins Reinvest AI. John joins Reinvest AI. Carlos joins Reinvest AI. Matthew and Batty, there's Batty. Jonathan, Miguel, Justin, all of you Reinvest AI. That's all within the last, my list ends after an hour, so that's all I got, last hour there. Welcome aboard. Thank you for joining on Black Friday. And then, of course, to top it off, yes, it does seem like Bitcoin is, while it had a little bit of a regain there of 90, a little bit of profit taking again, you got to 93, and still a little bit of diversifying happening here. Some people might think that this is because of, Michael Saylor's strategy, having some trouble raising money to keep supporting Bitcoin, and so people may be moving from Bitcoin and diversifying into, who knows, those broader-based ETFs, just like Citigroup is talking about. But if you are going to buy, we almost made it to 433. This was the goal on Tesla, was getting to 433 today. And we rejected 432 twice, or 433 twice. Look at that. 2 rejections. But anyway, if you are going to buy ETFs, remember that QQQM is much cheaper than QQQ to hold. And that's because they don't advertise QQQM. But evaluate the differences yourself, and then you'll find out. So, yeah, there you have it. So I think all that's left to talk about now is, that's not what I meant to do.
Welcome. Nice to have you. You want to talk about lovemaking, right?
Kevin is very talented, but I don't know if it's going to be him, but he's a very talented guy.
Kevin's somebody we'd consider. Kevin is fantastic.